సో ఇక్కడ చార్జర్ చార్జర్ ఇచ్చాం. Hi all. So live students, could you please confirm me whether audio is clear or not? It's okay. Good afternoon, everyone. Sir, in direct tax exam oriented batch, so if you look at our total chapters which we are having, our material itself has been categorized in a way that which questions you could choose and which questions, if at all, you cannot cover the full syllabus, which questions you could leave also. See, the first chapter is like basics, then deductions, PGBP, assessment of companies, IFRS, tax planning. Okay, so with this set of chapters, you could be solving like question number 2 and question number 3. So question number 2, sir, standardly it's being a 14 marks question. So in every paper pattern, I mean, if you look at all the past 5 examination papers, you could see question number 2 is always a 14 marks question. It will be mostly from what? PGBP. Okay, so or else like it's not PGBP alone. Along with PGBP, they even include the math provisions sometimes. Okay, so but by reading this set of 6 chapters, we could solve the question number 2. Then question number 3A and 3B. So 3A and 3B, sir, they've been asking about tax planning. So okay, that's about. Okay, so the points are not specifically related to a single chapter. So if they'll give you a situation, so you should advise like which would be better or which option would be better, whether to buy an asset or to take it on lease. That kind of financial management related questions are also there. Or else like salaries related, whether to take a perquisite or to take an allowance, those kind of questions are also there. Or new regime or old regime. Okay, so there are different combination of questions there. So which would be covered under tax planning. So if by doing this 6 set of chapters, we'll be getting the, solving the questions or the topics which were relevant for question number 2 and 3. So this is one set of chapters which is very much important, because here 28 marks we are getting, descriptive part. And from here only, there will be minimum of 3 MCQs. Minimum, sir, I am saying this one. Minimum of 3 MCQs from this 6 set of chapters only. That also. One will be always from basics, the tax rates relevant. Okay, then math related 1 MCQ will come always. And then another MCQ could be from any of those chapters. So minimum of 3 MCQs. So here we'll get a minimum of how many marks? 34 marks from this 6 set of, from these 6 chapters. Then the second set of important chapters are like DTA and transfer pricing. Here DTA and transfer pricing together, sir, will get 5 7 marks questions. 5 7 marks questions. But we are not counting 8B, sir, because 8A is a question where we cannot predict. Okay, it could be from any chapter, it could be. So that's why 8B I am not counting. So I am counting only 4 questions, which could be under 6A and 6B, 7A and 7B. So here there could be another 28 marks. So 28 marks again from what? DTA and transfer pricing. So again, to solve DTA question also, okay, this deductions part, basics tax rates part is relevant. Okay, so DTA and transfer pricing. So here another 28 marks. From these two alone, again there will be a minimum of 3 MCQs. Again a minimum of 3 MCQs. So here again another 34 marks. So this set of 2 chapters 34 marks, and the first set of 6 chapters 38. So 34 plus 34, here we are having 68 marks here majorly. Okay, with this we are covering 4 descriptive questions. Then the next set would be from question number 5. So what question number 5 related, sir? Return of income and advance tax. From here itself there will be 1 7 marks question. Return of income related and 7 marks. And then the another 7 marks will be from appeals and revision. Okay, so mostly advance tax related question also again. To calculate advance tax, again we should know the basics, deductions part and all. So advance tax here. Then appeals and revision, sir. Sir, some students what they are doing now, if I am saying strategy video or anything like appeals, there is a question, straight away they will go and read appeals chapter. The problem with appeals chapter is, unless you don't understand assessment procedures, set Caesar, you cannot understand appeals chapter. Okay, but once you have a normal, I mean, you need not to be thorough in these 2 chapters also. You have a basic understanding also, then you could do appeals and revision chapter. So this gives us another set of another set of question, like where you could answer another 14 marks. Okay, from this also, sir, from set Caesar always there is 1 MCQ. From return of income there is always 1 MCQ, and there could be another MCQ from any place. So here there is another 20 marks from this set of chapters. 20 marks. So 34 here, 34 from DTA and transfer pricing, 68. Another 20 marks from here, 88 marks. Okay, then we have capital gains chapter, business restructuring, non-resident taxation. Okay, so capital gains, business restructuring, sir. Capital gain actually it's not there in our institute book. Even PGBP also not there, but they are asking questions. To understand this business restructuring and reconstruction and some parts of this NR taxation, we should obviously study capital gains. Okay, so now the question is, can we solve all these in EVO? Okay, so let me tell me my plan, sir, what we are going to cover. 1 to 6 chapters. These 1 to 6 chapters covers 34 marks. I mean 28 marks descriptive part and 6 marks MCQ. This will be going to cover. Okay, to cover the first 6 chapters only, we'll take the first day and second day. First and second day our target is to cover this 34 marks. Okay, then the next set is like chapter 17 and 18, sir, DTAA and transfer pricing. DTA and transfer pricing, we have another 34 marks. Okay, this will be along with this DTA and transfer pricing, will cover return of income and advance tax. Advance tax. Return of income and advance tax covers another 7 marks, sir. Minimum only I am counting here because there is another descriptive question. So these 3 chapters will be covering in the 3rd and 4th day. 3rd and 4th day. So we have total 6 days now. So by here itself we have already covered somewhere like 75 marks will be covering in the 1st, 2nd, 3rd and 4th days. Then the 5th day, sir, will be covering assessment, search plus appeals. Assessment plus search plus appeals, these 3 set of chapters will cover on the 5th day. So here we'll be having another 10 marks. Okay, 1 7 marks, and there will be 9 marks minimum. Here we'll be covering assessment, search and appeals, 5th day. And 6th day, sir, will be covering capital gains and business restructuring. Capital gains and business restructuring. Okay, another 7 to 9 marks will be covering. So we cannot cover what chapters like in the EVO, non-resident taxation here. It's okay, but non-resident taxation chapter, I'll take it like in a recorded version also. I'll be providing even NR taxation also. Okay, again, separately I need to take a class for you because regular class also I cannot dump here. That would be another 10 hours. So I'll be taking NR taxation, but it won't be possible in this 6 days alone. Additionally, we'll be covering penalties chapter also, because penalties also there will be always like 2 MCQs are there. Okay, so these chapters will be getting in the EVO. Okay, minimum of like 100 to 105 marks will be covering in the EVO. Okay, and then MCQs part also, separate MCQs discussion will do. Okay, that may not be in the 6 days possible, sir. I'll tell a separate day once CFR EVO also gets completed. So that day, maybe mostly we'll plan it on Sunday only. So okay, that day we'll take like a 6-hour stretch. So we'll be covering like each and every chapter MCQs at a time. Okay, so here we are covering mostly like the descriptive part and the concepts part. Okay, MCQs will be discussing again a separate session. Okay, so totals are for us like in these 6 days we'll be getting a content of around 35 hours. Around 35 hours. Then NR taxation and penalties, another 5 hours will get, 40 hours. Plus MCQs if we take separately, 5-6 hours. So within 45 to 46 hours, we'll be covering all this content. Okay. And one more thing, sir, in the recent mock test paper, model question paper, question number 2, they have given like capital gains instead of PGBP. Okay, but still I believe like they are going to ask with the PGBP question only. But anyhow, we are not leaving capital gains. We'll solve even the capital gains concepts also. Sir, again, the big thing with the problem with the direct taxation. So even if I say or not openly, group 3, like when a student is going for a repetitive classes now, they'll take for SFM and DT only mostly. So because they feel like little tough. The problem with DT is like, it's not about you understanding, it's about you remembering. Okay, so when explaining in a class, it looks like easy only. But when writing exam, you should able to recall those points. To recall, there is no other formula, sir. You need to revise it like number of times only. So that's why we are saying like, if you don't have time and you cannot revise multiple number of times, leave 3 or 4 chapters outrightly, no problem. But whatever the chapters you took, revise them number of times. Then only you'll remember. Okay. So first one, sir, I'm starting with the basics part. Article 265. Article 265. What does it says like? Except authority of law, no other person can levy tax. So we don't have any right to levy tax on someone. Only the authority of law can levy the taxes. Then power is back. Windows close చేసావు గణేష్. Okay. Okay. Mr. Raja, they are listed in the app. Please call the office numbers. They'll guide you in getting the tax book. Sanju, you're not getting voice from both the sides. Everybody, could you confirm like whether you're getting voice from both sides or only from one side? Anyone else facing the same issue? Okay, 1 second. I mean, like when you're listening through earphones, does the voice is coming from both sides or only one side? It's okay then, fine. ఏదన్నా ఆప్షన్ కానీ ఇచ్చలేదు ఫిల్టర్లోకి వెళ్ళిన తర్వాత ఆడియో చెప్పండి ప్రాపర్టీస్ సార్ 3 ప్రాపర్టీ మోనో ఆన్ చేయాలి మోనో ఎనేబుల్ చేయాలి సార్ ప్రాపర్టీస్ ఓకే హాయ్ నౌ చెక్ దీపక్ హలో okay then fine. So what article 246 says, sir? Article 246 says like, sir, ours is a federal structure. Central and states can levy taxes separately. I mean, central can frame laws on certain matters, states can frame laws on certain matters. That's why, to have a clear differentiation between state powers and central powers, Article 246 lists out the matters on which central can frame law, state can frame laws. Union list consists of matters on which only central can frame laws, whereas state list consists of matters on which only states can frame laws, whereas concurrent list means those on those matters both central and states can frame laws. Okay, then components of income tax law. So the income tax law we are studying is not just the income tax act here. Along with Income Tax Act, we need to study even the Annual Finance Act also, because every year the tax rates will be given through Annual Finance Act. And then income tax rules also. Why rules? Because Act does not contain everything detailed. For simple example, to file a return of income, you should have a PAN number. That's what there in the Act. But to get the PAN number, you should go somewhere and you should apply the PAN card. So to apply PAN card, what form should be there, what fees you have to pay, all those kind of procedural aspects, step-by-step guidelines are given in the rules. So to have a proper understanding of Act, we should even read along with the rules. So that's why the tax law not just is about the Income Tax Act, it is about Income Tax Act, Annual Finance Act, and even income tax rules also. Income Tax Act 1961, it consists of 298 sections divided into 14 chapters. Annual Finance Act, amendments are carried out every year through the Annual Finance Act. Income tax rules, which will be issued by CBDT. These are like step-by-step guidelines. Then notifications and circulars. What is the purpose of notifications and circulars, sir? Sir, even though an amendment is made through Annual Finance Act, okay, but that would be made effective only through notifications. Okay, so first they thought of bringing an amendment, but then again they need to take the public opinion also. By taking the public opinion, they may postpone it for a few months. After getting settled, then they may made it effective. So that effectiveness is brought only through the notifications. So now notifications will be issued for both Act related and for even rules related also. If it is related to Act, the notifications will be issued by central government. If it is related to rules, the notifications will be issued by CBDT. So with respect to rules, the notifications is issued by CBDT. With respect to Act, these are issued by central government. So why notifications are issued? To give effect to provisions. Then circulars. Circulars, why circulars? Sir, circulars are clarificatory in nature. At any place where there is an ambiguity, to clarify that ambiguity, ambiguity na doubts, okay, to clarify such kind of ambiguity and doubt, clarifications will be issued. Who will be issuing clarifications? So circulars. Circulars or clarifications will be issued by CBDT to clarify doubts, binding on department. Binding on department, na, sir, Act, rules, notifications, all these has to be followed mandatorily by SSC as well as by department. But whereas circulars and clarifications kind of, since these are clarification by itself, it is not a law. It just try to give the intention of the lawmaker, okay, to clear the ambiguities. Whereas certain clarifications are not in favor of SSC, then SSC is not bound to follow the clarification, sir. That's why clarifications are binding only on department. Case laws. Case laws, na, decisions given by High Court and Supreme Court under various situations. Okay, even though the law is framed in an effective manner, sometimes the judgment, okay, sometimes people will be breaking the law, or they'll be routing the transactions in such a way that they'll find out the loopholes in the tax law and will be entering into transactions. To curb those kind of practices, certain Supreme Court and High Court landmark judgments are also part of our income tax law. Okay. Then section 1, sir, in every act, the section 1 consists of title. This is like Income Tax Act 1961, applicable, it came into force on 1st April 1962, applicable to whole of India. Section 2, it consists of always definitions only. So definitions we cannot read everything at a stretch. Whenever it is needed, then we'll be discussing those definitions. Now section 3, it's about what? Previous year. What is called previous year? The year in which income is earned is called as previous year. The year in which income is earned is called as previous year. The year in which the tax will be computed is called as assessment year. Sir, at a layman language, at inter-level, we'll tell it like the year in which we pay tax is called assessment year. But it's not correct properly, because we'll be paying in advance only advance tax. TDS and all will be paying in the year of earning itself. That's why assessment year is the year in which we assess income. Assess na computing. So previous year means the year in which we earn income is called as previous year. And it is usually a period of 12 months starting from 1st April. However, a new business has been commenced. Okay, for the first time you started a business and you started it on 1st October. Until now you don't, for that particular business, the previous year starts only from 1st October. And then you are having any source of income for the first time. Then also the previous year starts from the day only when you have that source of income. Okay, let's say on clearing CMA final, you got the job on 1st September. Okay, that is the first time you are having a source of income. Then the previous year will not start from 1st April, it starts from 1st September. Now there is a new source of income. The day it started is the commencement of previous year. But there is a new business or provision. The day such business commenced is the start of previous year. Then sir, again sir, to make it clear, for us the Finance Act applicable is like Finance Act 2024, and in 2024 sir, there are two Finance Acts. Okay, Finance Act 1 is given before elections, Finance Act 2 came after the elections. So Finance Act 2 of 2024 is applicable to us. We already got Finance Act 2025, but Finance Act 2025 is not applicable for December 25 exams. It is applicable only from June 26 exams. Okay, so usually sir, in a question they'll be giving us a P&L and okay, when they give the P&L of year 2024-25 financial year, that means the income is earned in the financial year 24-25. So the year in which income earned is called as what? Previous year. So previous year is 24-25 if the P&L is given for 24-25. Then assessment year. What is called assessment year? The year in which income is assessed to tax is called as assessment year. Assessment means what sir here? Computed. The year in which tax will be computed. Sir, for advanced tax also will compute tax, but that is on a provisional basis, not the final calculation. So here the calculation or computation means the final calculation. Okay, so the year in which you finally calculate the tax is called as what? Assessment year. Usually if income is earned in 2024-25, then the assessment year will be 25-26. Sir, again sir, one particular thumb rule. The year in which you are writing exam will be always assessment year. So okay, you are writing December 25. So that means which year it is like 25-26. It's always like assessment year only. For the incomes already earned, you are calculating tax. Okay, the year in which income is assessed to tax is called as what? Assessment year. It is immediately succeeding to the previous year. It is always a period of, sir, make a correction sir, it's always a period of not 12 p.m., 12 months. It's always a period of 12 months, starts from 1st April. Assessment year is always a period of 12 months, starts from 1st April. Sir, previous year may be starting from 1st September or 1st October because of new source of income or newly commencing business. But assessment year always starts from 1st April and it's a period of 12 months. Then we're moving on to charging section. What is the charging section, sir? The charging section says like income tax shall be charged. Charge means levied or imposed for every assessment year as per the provisions, as per the rates given in Annual Finance Act on the total income of previous year on every person. Sir, if you look at your inters level syllabus, reading or understanding section 4 is only our inter-level syllabus. Okay, tax charge is on every person. On every person there will be tax levy. Okay, on what? As per the rates given in the Annual Finance Act, and it will be levied on total income. Your inter-level syllabus is like finding out total income only. All the 5 heads you will understand, you will study, then set off, carry forward, clubbing you will do, deductions, TDS, TCS, finally you will be calculating the total income. And using these rates you will find out the tax liability. That is your inter-level syllabus. Okay, so charging section says like a charge called tax, income tax, will be levied for every assessment year as per the rates given in the Annual Finance Act. Okay, but on what it should be levied? On total income it would be levied. Okay, total income of whom? Person. Total income of a person. Sir, to levy tax, why it has to be levied? Why income tax will be levied? Because he has a source of income. Second one, when it will be levied? When na, the answer is what? Assessment year. Why na? Because he is having an income. When na? Assessment year. Whom? On whom it will be levied? On whom it will be levied? No, on every person it will be levied. Fifth one, on what it would be levied? On what na? Like there are multiple sources of incomes. Does tax is on every source of income, sir? For that only we need to calculate what? Total income. Tax would be levied on total income. Then person definition, sir. You might have learned this long back itself. Person includes individual, human beings. It could be major, minor, male, female, irrespective of gender, irrespective of age, individual. HUF, all that story is not required for us. HUF means there are like two school of thoughts, Mitakshara, Dayabhaga. Okay, so any HUF here. Then firm. Firm itself includes LLP here. LLP is not listed separately. Firm even includes LLP. Then company means it could be a domestic company or it could be a foreign company. AOP and BOI. AOP in a association of persons, BOI in a body of individuals. Local authority, artificial, judicial persons. All these are covered under the definition of person. Okay. Now, next one. On what the tax will be levied? On what the tax will be levied? So, tax will be levied on total income. So, we are just looking at the format, sir, how the total income has to be calculated. The first income we should take is like, we have 5 heads of incomes. Salaries, house property, PGBP, capital gains, IFOS. This is one mistake, sir. Usually in the presentation you will do. You will take randomly the incomes, like whatever is the income. But you should always follow what? The heads order. First income you should take it as like from salaries. Second one is like house property. Third one PGBP. Fourth capital gains. Then IFOS. Let's say in the question if there is no capital gains, then straight away you'll go with what? IFOS incomes. Okay. You have salary income and IFOS income. Like you have salary, interest and dividend. You cannot take first interest and dividend and then salaries. First it should be always like salaries income, then house property, then PGBP, then capital gains, and at last IFOS incomes. Okay. Income from salaries, income from house property, PGBP, capital gains, income from other sources. Then we should go for clubbing provisions. What is called clubbing? Sir, mostly they'll not ask detailedly about clubbing provisions to us. But sometimes a minor income will also be given in the question. So minor incomes are usually taxed in the hands of their parents. So they say like minor is having interest income. So now you'll be having a question like how to add there. Sir, whenever there are minor incomes, those minor incomes also has to be clubbed headwise. If that particular income is accessible under PGBP head, then include it in the PGBP income. If it is accessible at capital gains head, include it in the capital gains head. Okay. So you should do what? Clubbing provisions also headwise. Okay. You cannot add all the minor incomes as a total. Let's say a person is having 2 children. One child is having professional income. Sorry, if it is because of skill and it is taxable in his own capacity. Let me say like he is having some kind of capital gain income. One child. The other child is having IFOS income. If this needs to be clubbed, you cannot include them together as a total. Okay. Capital gain income, you should include it in the capital gain head only. IFOS head income, you need to include it in the IFOS income only. Clubbing provisions. Only after doing clubbing, then you should go for set off and carry forward. Okay. So let's say I have brought forward capital loss, long-term capital loss of 5 lakhs. I have brought forward long-term capital loss of 5 lakhs. Whereas SSE is having long-term capital gain of 3 lakhs. And his child is also having a long-term capital gain of 1 lakh. He is having a capital gain of 1 lakh. Sir, if you don't do clubbing before, sorry, this is also capital gain only. He is also having 1 lakh. Child is also having long-term capital gain of 1 lakh. The children income also has to be clubbed in the hands of parent. So now the parent total capital gain is not just 3 lakhs. It becomes what? 4 lakhs. Now with this 4 lakhs, you can adjust this 5 lakh rupees loss. Okay. So there are 1 or 2 places, sir, where this kind of point will come. Okay. So first you should do clubbing, then you should go for set off and carry forward. Okay. So once set off and carry forward is also done, then the total you get is called as what? Gross total income. From gross total income, you should subtract chapter 6A deductions, the total 80 series deductions. After deducting all those deductions, you will be arriving net total income or taxable income, whatever it is. From there, so again, sir, all the incomes are not taxable at a constant or a similar rates. There are certain normal rate incomes and there are certain special rate incomes. There are certain special rate incomes also. So that's why while computing tax, compute tax on total income excluding special rate incomes. That means, let's say I am having total income of 10 lakhs. In this 10 lakhs, 5 lakhs is normal rate income and 5 lakhs is a special rate income. So what you should do? First you compute tax on this 5 lakhs normal rates income separately. Then on the other 5 lakhs which is taxable at special rates. You cannot do it in a single step. Compute tax on total income excluding special rate income and then again tax on special rate incomes. Okay. Once you calculate tax, then again add both of them. On normal income how much you got as tax and special rate incomes how much you got as tax, both you should add. Then you will get the total tax. After that, surcharge or rebate. Then there will be health and education cess at a rate of 4%. Then you will be finding out the total tax payable. This is the basic format, sir. So now we will go into the tax rates. So once again, understand, headwise we should compute salaries, house property, PGBP, capital gains, IFOS. First we should apply clubbing provisions, then only we should come to the set off and carry forward. Okay. Once that is also done, then we will be arriving the gross total income. After gross total income, we will take chapter 6A deductions. After chapter 6A deductions, we will be getting net total income. So from net total income, straight away, if at all there are no special rate incomes, then you can calculate tax normally. If at all there are special rate incomes, then you need to separate the normal taxable incomes and the special rate taxable incomes. Calculate tax separately and then again add them. So you will get the total tax payable. On them again you will be adding surcharge. If no surcharge, rebate is applicable now, then you will apply rebate. Then the last step is like health and education cess at a rate of 4%. No, Sharanya. If the child earned income by own skills, will it be clubbed? No. That would be taxed in her or his capacity. Tax rates. So the basic slab rates we are discussing, sir. Tax rates applicable to individual, HUF, AOP, BOI, AJP under default regime. So default regime itself, the new regime itself is the current default regime. Under default regime, sir, we need not to bother about whether individual is a senior citizen or super senior citizen, whether he is a resident or non-resident. So irrespective of whether he is resident or non-resident, normal individual or senior citizen or even super senior citizen, the tax rate remain same. Or even super senior citizen, there will not be any change, they will remain same. What are the tax rates, sir? Up to 3 lakhs it is nil. 3 to 7 lakhs it is like 5%. 7 to 10 lakhs 10%. 10 to 12 lakhs 15%. 12 to 15 lakhs 20%. Above 15 lakhs 30%. Okay. But here, sir, one thing you should remember is like, to make our computations easy, you should remember the tax amount at a stage of 15 lakhs. At 15 lakhs, what would be the tax amount? Once you remember the tax amount at 15 lakhs, then it will be easy for you to calculate. If they give 40 lakhs, 50 lakhs also, it would be easy for you. Okay. So let's see the example, sir. Total income is like 11 lakhs. 0 to 3 lakhs, nil. 3 to 5 lakhs, 3 to 7 lakhs, 5%. 7 to 10 lakhs, 10%. See, on first 3 lakhs, nil. A tax payable is also 0. 3 to 7 lakhs, the income is like 4 lakhs. Tax rate 5%. If you apply, 20,000 is the tax payable. In between 7 to 10 lakhs, the income is like 3 lakhs. Multiplied with 10%, you'll get 30,000. Then the next lot is like what, sir? 10 to 12 lakhs. Here the total income given is 11 lakhs. In between 10 to 12 lakhs, we are having another 1 lakh. So 1 lakh into 15%, if you do, it would be another 15,000. So the total tax would be 65,000. Another example, sir. 15 lakhs. Sir, 15 lakhs example is an important one for us, because at 15 lakhs, you should remember the tax amount. Let's say if the question you need to calculate about 20 lakhs now, first 15 lakhs you should remember directly the amount. Then on the balance you will straight away apply 30%. That's why. So for 15 lakhs, how much it would be, sir? First 3 lakhs, nil. 3 to 7, 5%. 7 to 10, 10%. 10 to 12, 15. 12 to 15, 20%. If you calculate it step by step, the total will come to how much, sir? 1,40,000. For an individual SSE opted for default regime and is having a total income of 15 lakhs, then the tax alone, we didn't include cess and all, sir. Cess rebate not considered. Only the tax alone would be how much, sir? 1,40,000. Okay. Now the question may ask us like for 20 lakhs. For 20 lakhs, sir, you could do without using calculator also if you remember 15 lakhs. For 15 lakhs, how much? 1,40,000. Now additionally, we are having 5 lakhs. 5 lakhs into 30% now, 1,50,000. 1,50,000 plus 1,40,000, you will get it as like 2,90,000. Okay. So the question may have 25 lakhs, 30 lakhs and all. Sir, these are like simple time saving things only. If you remember for 15 lakhs the tax payable, then whatever the question they give, you could eliminate all these steps. Straight away 1,40,000 you will remember. The extra amount over 15 lakhs you will take, multiply it with 30% and you will add 1,40,000. Okay. Now surcharge rates. So first of all, sir, surcharge is levied on tax calculated. Okay. But whether surcharge is applicable or not is decided based on total income. Surcharge is not straight away levied on total income, it is levied on tax. So where the total income of individual, HUF, AOP, BOI and AJP. Sir, under person definition, there are 7 categories of people. Individual, HUF, firm, company, AOP, BOI, local authority, artificial judicial person. But now we are talking currently about only individual, HUF, AOP, BOI and AJP. For them, what are the surcharge rates, sir? Up to 50 lakhs, it is like nil. If the total income is between 50 lakhs to 1 crore, then the surcharge rate is 10%. If the total income is between 1 crore to 2 crores, then the surcharge rate is like 15%. Above 2 crores now, the surcharge rate is like 25%. So these are under the new regime. Default regime surcharge rates. These are like, we didn't went to the old regime. We are currently under the default regime only. Up to 50 lakhs, nil. 50 to 1 crore, it is like 10%. 1 crore to 2 crores, 15%. Above 2 crores now, it is like 25%. Okay. However, sir, this point, sir, you'll understand or you'll able to understand this point only when we go to capital gains. This surcharge rate, even though there is a 25% slab, but on certain capital, if a SSE is having a capital gain income or dividend income, then the maximum surcharge rate that could be levied on them is only 15%. Okay. In the capital gain intro chapter, we'll be discussing that one, sir. Capital gain in the first part only we'll be discussing that one. Okay. So once there is surcharge, then the next topic we need to understand is about marginal relief. Yes. Sorry, here there's a miss. 2 lakhs into 50%. Now it is like 30,000. Thanks, Gajendra. I rectified it. So marginal relief. Sir, marginal relief concept will come only when there is surcharge. Okay. Sir, a person is having 50 lakhs income, whereas a second person is having 50 lakh 50,000. Just because he is having an extra 50,000 income, for the second person surcharge is applicable, whereas for the first person surcharge is not applicable. The marginal relief overall concept is like his extra marginal income is only 50,000. For earning that extra 50,000 income, the extra tax he'll be levied also, it shouldn't be, he get levied also shouldn't be more than 50,000. The concept of marginal relief is like, if I have some extra 1 lakh revenue, the tax maximum on that extra revenue could be up to 1 lakh. It shouldn't be more than 1 lakh. So that's the basic concept of marginal relief, but we'll understand it like a stepwise. To understand marginal relief, sir, first we need to understand what are the slabs of surcharges. When the surcharge rates are changing or surcharge is applicable, 50 lakhs, because above 50 lakhs only surcharge will come. Above 1 crore now the rate will change, and above 2 crores. If at all old regime now there is a third slab also 5 crores. Okay, that's why the marginal relief understanding, the surcharge slabs will be like 50 lakhs, 1 crore, 2 crore, 5 crores. Okay. Marginal relief needs to be checked only when the total income is nearer to that of surcharge limits. Just because surcharge is there, we need not to check every time. When it is closer to that of surcharge limits, we need to check. Okay, what are the steps? Sir, we are discussing the concept along with an example itself. The total income of individual is like 1 crore, 1 lakh. 1 crore, 1 lakh na nearer to the surcharge limit only. See, first step. Compute tax on given total income. Compute tax on given total income. So around 1 crore 1 lakh, how much will be the tax, sir? First 15 lakhs. 1 lakh 40,000. If you remove 15 lakhs, how much would be there? 86 lakhs into 30%. 86 lakhs into 30%. How much? 20,000. So it would be total 28 lakh 60,000 is the tax. Okay, total itself is 27 lakh. I didn't get you. Okay, on 1 crore 1 lakh, the total tax itself is like on the first 15 lakhs and the remaining also. Total is how much? 25 lakh. 20. Total is like 27 lakh 20,000. Okay. On this, since the total income is above 1 crore, the surcharge is applicable at a rate of 15%. 50 lakhs to 1 crore, not 10%. Above 1 crore, it is how much? 15%. Now 15% if you levy surcharge, how much, sir? 4 lakh 8,000. So total together it will be how much? 31 lakh 28,000. So for computing marginal relief, the step 1 is like whatever is the total income given, on that we'll calculate tax plus surcharge. Cess you need not to calculate. Okay. After marginal relief, the next step is cess. Okay. So first you should compute only here tax and surcharge. How much? 31 lakh 28,000. Then second one. Compute tax on nearest surcharge limit to the given total income. Sir, what are the surcharge limits we are having? 50 lakhs, 1 crore, 2 crore and 5 crores. The given total income is 1 crore 1 lakh. To 1 crore 1 lakh, what is the nearest surcharge limit? 1 crore. So now second step is like compute tax plus surcharge if applicable on 1 crore. Okay, now on 1 crore, what is the tax, sir? 26,90,000 na tax. Correct only, yeah? It's okay, tell me. You calculate and tell. Only the tax. Need not to calculate surcharge. 26,90,000. 26,90,000. How it came, sir? Again, on first 15 lakhs, 1,40,000. On balance 85 lakhs, you apply 30%. Together, if you add, you'll get 26,90,000. Okay. So now, on this again, we need to calculate what, sir? Surcharge. What is the surcharge on 1 crore? Above 1 crore, na 15%. Only on 1 crore means it is 10%. So 10% if you add. 2,69,000 if you add. Total it will come to 29,59,000. So this is the step 2. So step 1, what we are doing? Whatever is the total income given on the tax plus surcharge. Step 2, identifying the nearest surcharge limit. On that again you are calculating tax plus surcharge. Now step 3, we'll find out the difference between the given total income and the nearest surcharge limit we have taken. What is the given total income? 1 crore 1 lakh. And the nearest surcharge limit we have taken is like 1 crore. So what is the difference between them, sir? 1 lakh. Now step 4 is simple, sir. Step 1 minus step 2 minus step 3. Okay. From 31,28,000 subtract 29,59,000 and 1 lakh. You will get the marginal relief as how much, sir? 69,000. So this is simple steps only, sir. First, given total income, you will compute tax. Step 2, nearest surcharge limit on the tax plus surcharge. Third one, difference between given total income and the nearest surcharge limit which you have taken. Okay, the difference you have taken. Now, marginal relief is nothing but 1 minus 2 minus 3. So, whatever the amount you get, it is called marginal relief. Okay, now from here, what to do with this marginal relief? Do we need to add it to the tax or do we need to subtract it? Sir, in the name itself, relief. Relief now it should reduce our burden. Okay, so from the tax already computed, what is the given total income, sir, for us? 1 crore 1 lakh. On that, what is the tax amount? 31,28,000. On that, whatever is the relief you computed, you just subtract that one. Then you will get the tax after marginal relief. Tax liability is like step 1 minus step 4. It would be 30,59,000. So this is excluding cess. Excluding cess, this is. So marginal relief applicable to each and every person. Even though here we calculated for individual, the steps remain same. Whoever the person is, first one will calculate on the given total income. Tax plus surcharge. Step 2 will take the nearest, identify the nearest surcharge limit applicable based on the given total income. On that also will calculate tax plus surcharge. Step 3 will calculate or will find out the difference between given total income and the nearest surcharge limit that has been taken. 3 points we got, step 1, step 2, step 3. Now marginal relief is like 1 minus 2 minus 3. Marginal relief concept is applicable to all the persons, even though here the example is taken considering individual. Then, so now for the same set of people, sir, individual, HUF, AOP, BOI and AJB will be discussing under the old regime. Okay, so to summarize, sir, under the default regime, 0 to 3 nil, 3 to 7 lakhs 5%, 7 to 10 lakhs 10%, 10 to 12 lakhs 15%, 12 to 15 lakhs 20%, above 15 lakhs 30%. The surcharge slabs are like up to 50 lakhs nil, 50 lakhs to 1 crore 10%, 1 crore to 2 crores 15%, above 2 crores na 25%. However, if there is like special rate incomes like capital gains and dividend, then it is restricted only to 15%. Okay. Then we have discussed the steps of marginal relief. Now, tax rates applicable to individual, HUF, AOP, BOI, AJP under old regime. Sir, under old regime, there's a differentiation between senior citizens, super senior citizens, and normal individuals. Okay, first category is like individual HUF. This is AOP, sir, not ADP. AOP, BOI, AJP. Either resident or non-resident. Okay, sir, if at all, to apply different slab rates to senior citizen should be resident. To apply different slab rates to super senior citizen also to be resident. If at all they are non-residents, then the general slab rates only applicable. Okay, I'll explain it once again, sir, once I finish the senior citizen category also. Now, what are the basic slab rates are here? 0 to 2.5 lakhs nil, 2.5 to 5 lakhs 5%, 5 lakhs to 10 lakhs 20%, above 10 lakhs it is like 30%. Sir, even in this regime also, you should remember the tax amount at 10 lakhs. How much it would be? See, where an individual has 10 lakhs as total income. 0 to 2.5 lakhs. 2.5 lakhs into nil, it is 0. 2.5 to 5 lakhs, 5%, it would be 12,500. 5 lakhs to 10 lakhs. 5 lakhs into 20%, it is like 1 lakh. Greater than 10 lakhs, now here no amount is there, so that's why not considered. So total would be how much? 1,12,500. So for individuals, sir, when individuals will be easy, na, DTA chapter is there. DTA chapter, they'll focus it mostly on individual perspective. You go to advanced tax, there also mostly again they'll focus it on individual perspective. Two questions were. Third one, sir, under 3A or 3B, tax planning there. There may be a question like old regime versus new regime. There also they may ask it in the point of view of individual. Okay, that's why to answer those questions quickly, if the individual has opted the default regime, 15 lakhs is the slab where you should remember the tax amount, 1,40,000. If it is old regime, 10 lakhs, 1,12,500 is the tax. Okay, if you remember this, then the others you could calculate easily. 20 lakhs na simply you will do. On the extra 10 lakhs, 30%, 3 lakhs. First 10 lakhs, 1,12,500. Total 4,12,500. Okay. Then individual plus resident and age greater than 60 years but less than 80 years. Then only he is called as senior citizen. He'll get the different slab rates. If he is a non-resident, then the first discussed slabs only applicable. I mean 2.5, 2.5 to 5, that only. Okay. Then, so now the question is, 60 years he should be attaining in the previous year assessment year. Previous year starting day to assessment year ending day, there is a period of 2 years. Because previous year like 24-25, assessment year 25-26. So now when we need to check whether he's got the age of 60 or not, on the first day of assessment year you should check. If he attains the age of 60, then he is called as senior citizen. Even his birthday on 1st April only. Okay, on first day of assessment year only he is getting 60. Still he will be considered as what? Senior citizen only. So by this you should understand, sir. At the time of earning, he need not to be senior citizen. But on the first day of assessment year, if he is senior citizen, I mean he attains age of 60, then the senior citizen slabs only applicable. Age needs to be checked on first day of assessment year. If birthday is on 1st April and attains 60 years on 1st April of assessment year, then also he will be treated as senior citizen only. So for senior citizens, first 3 lakhs, the tax is nil. 3 to 5 lakhs, 5%. 5 to 10 lakhs, 20%. Above 10 lakhs, 30%. The only difference is like instead of 2.5 lakhs, the slab has been increased to 3 lakhs. Why you think these have been increased, sir? Sir, for a normal person, I mean based on government expectations, 2.4 lakhs is a minimum needed amount to run a family if he is a normal individual. Senior citizen, he should be dependent on someone else, medical expenses or some other things. Okay, we need a helper, such kind of things. That's why they increased this slab to 3 lakhs. Super senior citizen he is much more dependent. That's why it is increased to 5 lakhs. Okay, individual plus resident and age greater than 80 years, then they are called as super senior citizens. Sir, understand na? Resident. These points are applicable on important on DTAA chapter, because there they'll give you a senior citizen point, 65 years he'll give. But if he is a non-resident, this additional or increased slab rates are not applicable. It would be only 2.5 lakhs. If the question asks in the default regime, then there is no difference at all. Up to 3 lakhs, nil only. Individual plus resident plus age greater than 80 years, then is called as super senior citizen. Up to 5 lakhs, nil. 5 lakhs to 10 lakhs, then it would be 20%. Above 10 lakhs nowadays, 30%. Then surcharge rates here, sir. Same as like the new only, sir. Extra one more slab will get added here. Total income up to 50 lakhs, nil. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. 2 crores to 5 crores, 25%. Above 5 crores, 37%. So once again, 50 lakhs, 1 crore, 2 crore, and then 5 crores. Up to 50, nil. 1 to 2 crores, 10%. 2 to 5 crores, sorry, 0 to 50, nil. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. 2 to 5 crores, 25%. Above 5 crores, 37%. Same here also, sir. Restricted to 15% in certain cases. Okay, if they are like capital gain income or dividend income, we'll understand it in the capital gains chapter. So here also, sir, we'll do once again the marginal relief concept here also. Steps remain same, sir. What is the first step in marginal relief, sir? Compute tax on given total income. Step 2, we'll identify the nearest surcharge limit. On the nearest surcharge limit, we'll calculate tax. Step 3, what we'll do? Difference between the given total income and the nearest surcharge limit. Marginal relief is nothing but 1 minus 2 minus 3. Okay. Here, total income of individual, age 40 years, and the total income is like 5 crore, 3 lakhs. Sir, we are doing it under the old regime. So, step 1, compute tax plus surcharge on 5 crore, 3 lakhs. 5 crore, 3 lakhs. Five crore 3 lakhs na. First 10 lakhs we know 1,12,500. The balance 4.9 crores into 30%. Just try, sir, and check whether you are getting the same answer or not. Surcharge would be 37%. Just try the tax on 5 crore 3 lakhs. Same, right? Okay. Got right. Second one, sir, step 2. Okay, if 5 crore 3 lakhs is the given total income, what would be the nearest surcharge limit? 5 crores. So then we'll be calculating tax plus surcharge on 5 crores as well. So 5 crores na, how much will be the tax? Surcharge would be only 25%, sir, here. Yes, Rahul. Super. Other students who are in live also respond. You learn swimming only when you go into the pool. You watch 100 YouTube videos. You will not learn swimming. The same way tax also. If you solve, then you'll understand the problems or issues. Otherwise, you'll become a reviewer. Okay. So they're just watching my class now. So, okay, just like as audience. So they'll not learn subject and all. They'll just learn to review me. Compute tax plus surcharge on nearest surcharge limit is how much, sir? 1 crore 85 lakh 15,625. Then step 3, what we'll do, sir? Difference between given total income and nearest surcharge limit. 1 crore, it would be like 5 crore 3 lakhs and 5 crores. It would be how much? 3 lakhs. Okay. Then step 4 is about marginal relief. How to compute marginal relief, sir? Step 1 minus step 2 minus step 3. So if you do, you'll get 16 lakh 800 as the marginal relief. Sir, if at all it has been asked as an MCQ, you should be clear whether they are asking tax payable or marginal relief. Tax payable means what you should do? From the step 1, the tax computed, you should subtract marginal relief. Okay, so then the ultimate tax liability before adding cess would be 1 crore 88 lakh 15,652. Then tax rates, sir. Special tax rates, sir. These are applicable irrespective of whether assessee has opted for default regime or even for old regime. The special tax rates are applicable to all the class of persons. If at all long-term capital gains are there. So this one you need to by heart now. Section 112A. Under 112A, 3 assets are covered. One is listed equity shares. The second one is like units of equity oriented fund. So what is called equity oriented fund? Sir, equity oriented fund, it's a mutual fund. It predominantly invests in equity shares only. So that's why it is called as an equity oriented fund. Then units of business trust. Sir, business trust means so there will be a trust. Okay, so this trust pool money. It pools money. Okay, sir, in a company na, when I invest money in the company will be allotting me shares. But here this is a trust which is formed for doing business only, not for charity and all. Okay, so then when it pools money from so many investors, then trust in return will allocate them units. Okay, now what this trust will do? This trust may be investing in a real estate project. Okay, so for that, sir, it creates another person, maybe a company or maybe another unit like. Okay, it doesn't mean trust will create only one company. There may be number of companies that would be created by this particular trust. Let's say, for example, I have taken one company has been created. Okay, now what is the business of this company? This company may lay roads, or this company may construct a commercial complex. Now with this laying road or constructing commercial complex, this company will get the income. What kind of income, sir? These complexes will be given on rent. So from these complexes, the company will get rental income. By way of laying roads, the company will get the toll income. Tolls will be collected. Okay, so now whatever the income that is collected by company, that would be given again to the trust. Okay, then the trust will be again giving it to the unit holders. So this is the chain of business trust. So business trust will pool money, and again based on different kind of operations, it will be floating different companies, just like as like a mutual fund. If you remember SFM mutual funds chapter, mutual fund first pool money. Then there is an asset management company. So this is something like an asset management company. This company will actually, will really be investing in a project. Okay. From that project, the company may be earning a rental income, toll kind of incomes, or interest or dividend kind of incomes will be earned. And that would be again transferred to the trust. Trust again will be distributing it to the unit holders. Okay. So listed equity shares, units of equity oriented fund, units of business trust. Okay. So listed equity shares, unit of equity oriented fund, units of business trust. From 23rd July 2024, there is an amendment, sir. So what is the tax rate from then on? 12.5% flat rate in excess of 1,25,000. 1,25,000. Sir, previously, before 23rd July, what is the tax rate, sir? 10% in excess of 1 lakh. 10% in excess of 1 lakh before 23rd July. Okay. Then section 112. 112 is about what? Other long-term capital assets. If the long-term capital asset is being listed equity share, units of equity oriented fund, units of business trust, then flat 12.5% in excess of 1,25,000. If any other long-term capital asset, the tax rate is like 12.5% flat rate without indexation. Okay, this is without indexation, and this is from 23rd July 2024. Previously, sir, the tax rate used to be 20% here. Sir, if there is a sale of land, sale of a building, long-term capital gains are there. On them, previously, the tax rate used to be 20%. But with 20%, they can avail the benefit of indexation. That indexed cost of acquisition, indexed cost of improvement. You remember anything, sir? Index numbers will be there. We used to do indexation. That concept is no more relevant, sir. Okay. Indexation is not available from now on. And the tax rate will be 12.5%. Before amendment, it is like 20% with indexation benefit. Okay. So why tax rate has been reduced now? Because they have removed the indexation benefit. Then short-term capital gains. Short-term also two categories, sir. 111A, 111. 111A, again, the same three class of assets. Listed equity shares, units of equity oriented fund, units of business trust. The tax rate would be 20% flat rate from 23rd July 2024. Previously, sir, it used to be 15%. Before, it is like only 15%. From 23rd July, it came to 20%. But before, the tax rate is like only 15%. Other short-term capital gains means then they are taxed at normal rates. Other short-term capital gains, now they are taxed at normal rates. Okay, Rahul, corrected it. Then casual incomes. Sir, what are called as casual incomes? Betting, horse races, lottery. Okay. Those kind of incomes. Winning from a game show, Big Boss winners and all, they'll get winning money, right? So not for participation fees. For staying in Big Boss also, they'll get monthly some amount. Okay. For number of days, they'll get some amount. That is remuneration. Okay. That is their professional receipts, taxable under that PGBP. If they get the final winning money, that is taxable under 115 BB. Okay. So winnings from game shows or anything, and then lotteries, puzzles, card games, horse races, all these are taxable at a flat rate of 30%. If they are winning from online games, okay, if they are winning from online games, maybe something like Dream 11, okay, these cricket betting apps are there, any other kind of online games related, then the tax rate would be flat 30%. If it is undisclosed income, in a search operation, they found out some income with you or some assets with you. For those income and for those assets, you cannot give explanation, nor the explanation provided is not satisfactory. Okay, in a search operation, they found out money, and for that money, you cannot give explanation, or the explanation is not satisfactory. Then the tax rate is like 60% is the base tax rate. Surcharge, the normal surcharges are not applicable here. 25%, even though it is 1 lakh only, still 25% surcharge is applicable and cess at a rate of 4. Common thing only. Effectively, it will go to 78. How 78, sir? Don't add straight away 25, sir. 60 into 25%. Then it would be 15. Plus 4% on 75%, now it will get 3. So then it will get to 78. If you add straight away 60 plus 25 plus 4, it will become 89. Tax 60%. On tax 60%, surcharge at 25%, now it would be 15%. So total 75. On that cess at a rate of 4%, it would be 3. Overall effective rate is 78%. And then transfer of virtual digital assets, cryptocurrencies. Okay, so if any cryptocurrencies are being transacted, then for the cryptocurrencies, although the tax rate would be how much, sir? Flat 30%. Applicable only from 1st April 2024. So this one. On virtual digital assets like cryptocurrencies, the tax rate is like flat 30%. Then we are moving on to rebate. Rebate under both new tax regime and even under old tax regime. Old tax regime na simple one only, sir. The net total income. Sir, whenever they mention it as like just the total income, they always refer it to net total income only. You need not to again worry about gross or net. Simply when it is said like total income, it is always net total income. Where the total income is within 5 lakhs, then rebate is available under old regime. How much is the rebate? 12,500 or tax payable, whichever is lower. Then under new regime, sir, usually for surcharge we will be having marginal relief. But even because of rebate also, there's a problem. Some people are getting more tax and all. That's why under rebate also they introduce marginal relief kind of concept. So how it works means, when the total income is less than 7 lakhs, no problem, sir. Simply we can do. How much it is like? Tax payable or 25,000, whichever is lower. The problem, this is an amended point, sir. I mean, even for the June attempt also it is applicable, which is came from the June attempt only. What is this point? Where the total income is greater than 7 lakhs also, you can get rebate to the extent of marginal relief. How much? How to calculate that one? First compute tax on 7 lakhs. Because the nearest is such, okay. Sir, we can do it like marginal relief kind of steps also. Let's say the question given, total income given in the question is like 7,20,000. 7,20,000. Step 1. You should calculate tax on 7.2 lakhs. You should calculate tax on 7.2 lakhs. New regime, sir. On new regime, what will be the tax, sir? 0 to 3, nil. 3 lakhs to 7 lakhs, it is like 5%. So 3 lakhs into 4 lakhs into 5% are 20,000. Plus on this extra 20,000, you need to apply 10%. So the tax would be how much? 22,000. So are you able to understand, sir, here? Where the total income given is 7.2 lakhs. First 3 lakhs nil. 3 to 7 lakhs 20,000. 4 lakhs into 5%. And above 7 lakhs 20,000 is there. Multiply it with 10%, you will get 2,000. So the tax is 22,000. Then step 2. Tax on 7 lakhs. Okay, don't give rebate, sir. Without rebate. Tax on 7 lakhs without rebate. How much, sir? 20,000. Without rebate, it is like how much? 20,000. So now, what is the relief? The difference amount is how much, sir? 2000. If this is a positive amount, okay, it would be always like positive only. 1 second. Compute tax on 7 lakhs, that is 20,000. Step 2, compute tax on total income 7 lakh 20,000, that is 22,000. If step 2 is greater than step 1, then step 2 minus step 1, that equals to 2000 is the rebate, sir. See, here we should not calculate tax on 7 lakhs, sir. What we should do here is like step 2. Write down clearly, sir. You will get it much more quickly. Total income is how much? 7 lakh 20,000. Tax on 7.2 lakhs, you will calculate how much? 22,000. Then you will find out the difference between 7 lakhs and given total income. Difference between 7 lakhs and given total income. How much, sir? Difference between 7 lakhs and given total income? 20,000. Okay. Now do step 1 minus step 2. How much? 2000. If it is a positive number, take it as what? Rebate. Okay. If it is a negative number, then leave it. Okay. If it is a negative number, then you will be leaving it. No rebate is applicable. This is a rebate on what? Sorry, this is what? Marginal relief applicable even in this case also. So then there is the rebate of how much, sir? 2000. So now I'll take one more example and solve it for you, sir. Let's say the total income given is like 7,50,000. Total income is like 7,50,000. Step 1, what we'll be doing, sir? We'll be calculating tax on 7.5 lakhs. Tax on 7.5 lakhs is how much? Tax on 7.5 lakhs is 25,000. Then you'll find out tax on you find out the difference between given total income and 7 lakhs. How much is the difference, sir? 50,000. So this is step 1, this is step 2. So you will do what? Step 1 minus step 2. Step 1 minus step 2, if you do now, you will get negative figure of how much? 25,000. You will not get any rebate kind of here. Okay, only if it is positive number, then you will get the rebate. Okay, so write it correctly, sir. First step is like what? Tax on 7.2, tax on given total income. Step 2 is like what? Difference between 7 lakhs and given total income. Sir, why you should take 7 lakhs? Because for the marginal relief, the limit is like always 7 lakhs only. So you'll be taking the 7 lakhs here. Tax on 7.2 lakhs 22,000 and difference between 7 lakhs and given total income 20,000. If you do step 1 minus step 2, you'll get the rebate. Then we are moving on to tax rates applicable to companies. Normal regime for the domestic companies, sir. Just like as individuals, HUF, AOP, BOI, companies also has both old regime and new regime. For individuals and all, new regime is the default regime. But for companies, new regime is not the default one. Still the old one is only the default regime. Okay. So turnover in the previous year is like 22-23 is within 400 crores. Then the tax rate is 25%. Okay. Long back, sir. In India, we thought of like reducing the direct tax rates. Okay, because in all the developed countries, the direct tax rates would be lesser or no tax rate, no direct tax itself. That's why as a part of, we also reducing the direct tax rates. First step we have initiated is like to bring down from 30% to 25%. For that, for the companies whose turnover is within 400 crores, the tax rate would be 25%. That also which year, sir? 22, 23 years. And if it is more than 30%, sorry, if it is more than 400 crores, then the tax rate would be 30%. Okay. These are for what? Domestic company. Domestic company, the turnover we should check of 22, 23, within 400 crores, na 25%, above 400 crores, na 30%. Then surcharge. Up to 1 crore, the surcharge is nil. 1 to 10 crores, the surcharge is break look correct. Up to 1 crores, it is nil. 1 crore to 10 crores, then the surcharge rate is how much? 7%. Okay, if it is like above 10 crores, now it is like 12%. 7 and 0, 7, 12. Up to 1 crore, nil. 1 crore to 10 crores, 7%. Above 10 crores, 12%. For foreign companies, the tax rate is like 35%. Previously, it used to be 40, sir. But then it is reduced to 35%. 1 to 10 crores, the surcharge rate is like 2%. I mean 0 to 1, nil. 1 to 10 crores, 2%. Above 10 crores, it is like 5%. Then optional regime that are available to domestic companies. So these are optional. These are new rates only, but still it is like optional only. 115 BA, then the tax rate is 25%. BAA 22%, BAB 15%. These three sections are will discuss anyhow in detail in assessment of companies chapter. When BA will be opting, when BAA, when BAB, what benefits you lose by opting BA, BA or BAB, all those things. Okay, the optional rates are like 25, 22 and 15%. The surcharge are also different, sir. If at all they opt 115 BA up to 1 crore nil, 1 crore to 10 crore 7%, above 10 crore 12%. If they opt for 115 BA or BAB, the surcharge is always fixed 10%. So this is company related marginal relief, sir, but I am not again discussing the simple one only, same steps. Then tax rates applicable to cooperative societies. For cooperative societies, sir, new regime up to 10,000 it is like 10%. Okay, the default regime, sir, up to 10,000 it is like 10%. 10,000 to 20,000 it is like 20%. Above 20,000 na 30%. Cooperative societies. The surcharges are like up to 1 crore nil, 1 crore to 10 crore 7%. Above 10 crores na it is like 12%. Then for societies also there are optional rates, sir. If it is a residential cooperative society other than 115 BAE, then the tax rate is like 22%, surcharge fixed at a rate of 10%. If there are cooperative societies which are into manufacturing, cooperative society which was engaged into manufacturing activities, then they will have a tax rate of only 15%, surcharge rate of 10% fixed. If it is other than manufacturing related society, then it will come to BAD, then the tax rate would be 22%. These are like optional ones. Then for firm and LLPs. For firm, LLP and local authorities, sir, the tax rate will be always 30% flat. Surcharge rates are like up to 1 crore nil, above 1 crore na straight away 12%. The next one, sir, maximum amounts that are not chargeable to tax. I mean basic exemption limit or nothing but called as maximum amounts that are not chargeable to tax. Default regime for individuals 3 lakhs. I mean up to 3 lakhs it is not taxed. Normal, I mean old regime, normal individuals 2.5 lakhs. Senior citizen na 3 lakhs. Super senior citizen na 5 lakhs. Okay. See, new regime, sir, new or default regime, it is always 3 lakhs only. But old regime na 2.5 normal case. Senior citizen na 3 lakhs. Super senior citizen na 5 lakhs. Then health and education cess. When cess has to be levied, sir, first the tax you need to calculate. then surcharge or rebate, any one thing will come, because surcharge is applicable only when income exceeds 50 lakhs. Rebate ends when the income is above 7 lakhs. Now rebate is not going to be there. That's why you to the tax, if surcharge is there, you will be adding. Rebate is there, now you will be subtracting. And then you will add health and education cess at a rate of 4% on tax plus surcharge or tax minus rebate. Then rounding off. Sir, what has to be rounded off, sir? Total income or tax payable shall be rounded off to the nearest multiples of rupees 10. Okay, that means if at all the total income or tax payable is 6,75,433, round off to 430. 435 rounded off to 440. Sir, I mean 5 and above shall be rounded off to the next number. That's the importance here. 435 is rounded off to 440. 437 is also rounded off to 440. Then average rate of tax, sir. Here there's a mistake in this particular point, so be careful. Average rate of tax, again it is also important for what? DTA chapter only. There only will be using much. Average rate of tax means tax payable divided by total income. Simple formula. You will find out the tax payable including surcharge, cess, everything. The final tax payable you will take divided by total income into 100. Here only. Okay. Tax payable divided by total income into 100. Okay. So now here the mistake is like income from house property 7 lakhs. Interest 25 lakhs is having. Long term capital gains under section 112A. So 112A now, what is the taxability, sir? 12.5% in excess of 1,25,000. Dividend 10 lakhs. Gross total income would be 57 lakhs. Okay. Sir, here it's not 15 lakhs, sir. We should take it here 16,25,000. Then the total income would be how much? 58,25,000. Why? Because like I calculated tax after like giving the exemption. That's why. So 112 na, it will take here 16,25,000. So the total income is how much, sir? 58,25,000. Then tax computation, if you see, sir, how I said like tax has to be computed? If the total income includes normal rate income and special rate incomes, first compute tax on normal rate incomes. What are the normal rate incomes here, sir? House property, interest and dividend. If you add them, it would be 42 lakhs. So tax on other incomes, sir, 42 lakhs, assuming he is an individual, plus old regime, I think I have taken here. So 42 lakhs, first calculate tax until. On 15 lakhs, it would be, if at all default regime, na 15 lakhs, it would be 1,40,000. So it's like old regime only, sir. It was calculated on old regime and new regime. Old regime. New regime 9,50,000. Okay, let me make it clear here. I'll keep it as like it is under new or default regime only. Okay, so the tax is like here it is correct only. Then second step, sir, long term capital gain under 112A. Under 112A, it is like how much? 15 lakhs into 12.5. Why only 15 lakhs? Because 1,25,000 is exempted. So the point to be understood here is like on capital gain 1 lakh, on listed equity shares, units of equity oriented fund, units of business trust, first 1,25,000 is not taxable. It's not exempted. It's just not taxable. So it is part of total income. But while calculating tax, we'll ignore that 1,25,000. Understand, sir? So that's why here in this 57 lakhs also the 1,25,000 which is not taxable also has to be included. Okay, so the total income is how much? 58,25,000. Whereas here the tax will come to tax total how much, sir? 11,37,500. Okay, plus surcharge will also come. Why surcharge, sir? Because the total income is above 50 lakhs. What is the surcharge, sir? 10%. It comes to 1,13,750. So then cess at a rate of 4% if you do, how much? 50,050. Okay, the total tax liability is like 13 lakh 1,300. So here you should do 13 lakh 1,300 divided by 58 lakh 25,000. 13 lakh 1,300 divided by 58 lakh 25,000 into 100. How much, sir? 22.34% is the average tax rate. So capital gain amount, 54 related exemptions if any are there. So under capital gain, there are 54 series exemptions. What are 54 series exemptions? You sold a house property and you purchase another house property, then you will get certain exemptions. Or if you invest in RECL bonds, NHA bonds, 54 EC. Those exemptions you could subtract there only. But with respect to 112A assets, the first 1,25,000 is exempted. Na? Even though it is not taxable, it forms part of total income. It forms part of total income. Sir, able to understand, sir? The students who are watching through live also. Then maximum marginal relief. Maximum marginal rate. Maximum marginal rate na highest tax that could be levied. Simple, sir. Take the highest tax rate applicable. Levy the highest surcharge rate applicable. Okay, on that cess. Then you will get the maximum marginal rate. Highest slab rate under default regime 30%. Highest surcharge rate applicable 25% plus 4. So the total would be 39%. If it is old regime, na 30% is the 30%. Surcharge rate would be 37% and tax would be 4%. So altogether it would be 42.744%. Then revenue receipts versus capital receipts. Revenue receipts na which are recurring in nature. Capital receipts na they will come only in a while. So let's say for example on a house property, rent is a recurring income. So it is called revenue receipt. When you sell the house itself, the capital gain is called as what? Capital receipt. Capital gains on sale, capital receipt. Rent which we earn regularly is called revenue receipt. Capital gains, most of the part exempted. Previously, sir, that one, I mean, as per the institute book, that only given. But currently there is no exemption also there. That indexation part also they are considered as exemption previously. But now, flatly it is being taxed. So this point has to be changed. Capital gains are also mostly taxable only. Revenue receipts are also mostly taxable. Income. So what are capital receipts? Income earned by way of sale of source of income. The source itself is sold. Then that is called as capital receipt. Where the income is earned by way of utilizing the source of income. Like on a share you get dividend income. On a property you will get rental income. Okay. Those are called as revenue receipts. Then usual rule is like previous year income is assessed to tax in the assessment year. There are certain exceptions where the previous year income will be assessed in the assessment year itself. Why? Because of some practical difficulties. SSC may not be available in the next years. Okay, or it will be highly impossible or very much complicated for the departments to tax in the succeeding years. That's why they may be taxing in the year of earning itself. I mean, they'll be computing also, finalizing the assessment also. What are those? First one, in SSC engaged in non-resident shipping business. Sorry, a non-resident doing shipping business. He came for one particular trip to India. We don't know when such person will be again coming back to India. So once we leave him now, there is no chance of again we finding him and again assessing him. That's why in the previous year itself we will be assessed to tax. Non-resident shipping business. Okay. Again, sir, this point will come in the non-resident chapter also. Non-resident taxation chapter also, this point will be there. A non-resident carrying out shipping business. He came to India, okay, carrying a cargo or carrying a passengers. There is no certainty that he will again come back. If you wait till assessment year, next year he may come or may not come. So next year there is no chance of again you being taxed. That's why in the current year itself you will be assessing him. Second one, persons leaving India for employment outside India. And AO believes that he has no present intention to come back. Someone is leaving India, sir, and he has no intention to come back. If you leave him now, he will not be paying taxes. That's why income will be assessed in the previous year itself. Then AOP, BOI, AJP formed for a purpose or event, and such purpose or event is accomplished. So once the purpose is accomplished, that AOP, BOI may dissolve. Once it is dissolved, there is no one person we can make responsible to pay the taxes. So one person will be saying, I mean X will be saying like Y is responsible, Y says Z name, Z will say A name. So like that, the department has to face difficulties in getting their tax income. That's why previous year income will be assessed in the previous year itself. Then persons trying to dispose or pledge properties to avoid taxes. Sir, SSE has to pay taxes, but since he has to pay tax, he is transferring the property on a different name, or he is mortgaging the property to avoid the tax liability. In such case also, previous year income will be assessed in the previous year itself. Last one, where the business is going to be discontinued. Company going for insolvency, company going for liquidation. In that cases, they need not to wait till assessment year, because when they wait for assessment year, nobody will be there to pay taxes. That's why previous year income may be assessed in the previous year itself. Then undisclosed source of incomes. So all these, sir, we need not to be particularly read out each and every line. Understand? In a such place, okay, when the department people came to the SSE's place, and during the search, they found out any money, bullions na gold bars, jewelry, or any investment details, okay, and SSE cannot provide explanation to them, or the explanation provided by SSE is not satisfactory to the AO, then they will classify it as undisclosed source of income. You are in possession of some 10 kgs of gold. Then you need to explain how could you buy the 10 kgs of gold. If you cannot provide explanation, or the explanation is not satisfactory, then it is treated as undisclosed source of income. Then unexplained expenditure. Okay, Ganesh lavishly spending on his wedding. 5 crores he has spent. When the AO asked him how he has spent 5 crores, I mean how he got 5 crores, he cannot provide explanation, or the explanation is not satisfactory. Again, that 5 crores which is already spent also will be treated as undisclosed source of income. Third one, amount borrowed or repaid through hundi. I mean nothing but you have some hundi document. So hundi document, it's a very earlier version of things, sir. Currently no hundi documents are there. Okay, hundi we know only the temple hundis and all. Okay, but previously there is something like hundi document which is like a promissory note kind of. Okay, so on that basis they used to borrow money and all. Okay, so on that, sir, you have some 5 crores money with you. When the assessing officer came suddenly for such operation, you are saying like this 5 crores I have borrowed from my friend, you are saying. And you are saying like there is a hundi document. For this hundi documents there won't be any stamp registrations and all. Just on a plain paper, both will write and sign. So okay, you are just written something and shown that and saying like this 5 crores has been given by like some 500 people. Each 10 lakhs given to me, and I have saved here. So such kind of stories and all they will not believe. Okay, if it is actually borrowed, there should be some mortgage deed, promissory note. Then only they'll believe it as like a loan money. Otherwise, that will also be treated as undisclosed source of income. Undisclosed source of incomes are taxable at tax rate 60%, surcharge 25%, and cess at a rate of 4%. Sir, MCQ is being asked on these things, sir. That's why. Okay, undisclosed source of incomes. Then the next part, sir, this 3 part, important in solving like question number 3 related. If at all SSE has chosen new regime or the default regime, he'll have to forego certain exemptions. Okay, those parts are, I mean under salaries he need to forego certain exemptions. Under house property he'll be foregoing certain exemptions, those things. First one, salaries related, sir, HRA, house rent allowance. Okay, house rent allowance is given for a employee, sir, based on metro city, non-metro city. Okay, 40% of basic salary or 50% of basic salary. That we need not to read everything. If at all they ask also, straight away they'll calculate and give us. Okay, we need not to read the whole salaries chapter. But the thing you need to remember is like HRA exemption is available only under old regime. Such exemption is not available under default regime. Then leave travel concession. Leave travel concession means, sir, SSE can avail this kind of exemption twice in a block of 4 years. Like again, inter-level salaries chapter only. Okay, so within the country, if he goes for any vacation, for him, spouse and children, okay, whatever the leave travel amount paid by employer will be claimed as exemption. Okay, only such exemption is available under the old regime. Under new regime, such exemption is not available. Then children education allowance 100 per month exemption is available under the old regime. For each child 100 per month will be given as exemption under old regime. New regime such exemption is not available. Hostel fee allowance rupees 200 per month will be given as exemption. Maximum 2 childs are these two. Okay, these are given under the old regime, but under new regime this exemption is also not available. Whereas if you see travel allowance for disabled people, sir, there is a travel allowance given up to 3,200 per month. That is allowed even under the new regime also. So travel allowance which is given to disabled 3,200 per month, that is even available under the new regime also. Then these set of allowances, sir, travel allowance on transfer, daily allowance, uniform allowance, these allowances are like under new regime, under the old regime also. So when you are being transferred from one place to another place, to shift from one place to another, you will incur certain travel expenditure that will be reimbursed by the company to the extent of amount you, let's say company has given you 40,000 to shift your location from Hyderabad to Bangalore, but out of 40,000 you spent only 20,000, and the exemption is available only to the extent of 20,000 only. Okay, that was there in the old regime, and even it is even there in the new regime also. Okay, so these are like reimbursement kind of, to the extent you spent only the exemption is available. Whereas children education allowance, HRA, for them amount actually spent is irrelevant. Okay, so with respect to travel allowance on transfer, daily allowance, and then any uniform allowance has been paid, to the extent of actual expenditure made is exempted. The same exemption is available even under the new regime also. Then retirement related, gratuity, pension, leave encashment, VRS, retrenchment, PF, all those exemptions will be there. All will be available even under the new scheme also, or the new or default regime also. Perquisites, sir, perquisites kind of treatment is same in both the new regime as well as on the old regime. Standard deductions, sir, again here there is an amendment, important. Section 16, standard deduction. The standard deduction available is like 50,000 only under the old regime. But if SSE chooses for new regime, then the standard deduction available is like 75,000. The standard deduction available is like 75,000. Entertainment allowance. Okay, entertainment allowance, professional tax, all these allowances or exemptions are available only under the old regime, default regime, nothing is available. So important points are like, one is this standard deduction. Previously, I mean old regime now it is 50,000 only, new regime it is 75,000. And then in one question I have seen somewhere this children education and hostel fee allowances related, exempted under the old regime, the exemption is not available under the new regime. House property related. So if you remember the house property format, first we need to find out the GAV, gross annual value. Fair rent or municipal rent, whichever is higher, restricted to standard rent, which we call it as like expected rent. That should be compared with the actual rent. Whichever is higher, we'll take it as like GAV, gross annual value. Okay, till GAV nothing change. From GAV, we'll be subtracting the municipal taxes paid. After subtracting municipal taxes paid, you'll get the NAV. So those municipal taxes paid are allowed as deduction only both under old regime as well as under the new regime. Then on NAV, 30% of NAV is the standard deduction there. So that is also allowed under both old regime as well as new regime. So 24A standard deduction is like 30% of NAV. Then the second one is like interest deduction. House property head, sir, from NAV you will have two deductions. One is standard deduction, 30% of NAV. Second one is interest paid on construction of that house property, pre-construction interest or post-construction interest. self-occupied, the interest deduction is restricted to 2 lakhs. Whereas let out property, there is no ceiling on interest. That is under what? Old regime. Okay, so old regime allowed interest also. How much? Self-occupied maximum 2 lakhs, let out no limit. Whereas under new regime, sir, self-occupied no interest is allowed. Whereas let out how much ever it is being allowed. Then house property loss. House property loss is eligible to be set off with any other head, even with salary set also. Okay, okay, house property loss can be set off with any other head loss, but to a maximum of 2 lakhs under the old regime. But under the new regime or default regime, house property losses are not eligible for inter-head adjustments. I have 2 house properties. Property 1 has income, property 2 has loss. These 2 can be set off. But the house property loss can't be set off with salary income or PGBP income or capital gain income. Okay, set off possible within the head only under the new regime. Then carry forward of loss, same 8 assessment years, 8 assessment years. So under house property head, sir, self-occupied property related interest reduction is not available under the new regime. Let out interest is allowed only, but the loss is eligible to be set off only within the head. Inter-head adjustment is not possible. Then PGBP, sir, anyhow we'll discuss PGBP. There we'll be discussing separately. Capital gains, there are no much differences. Then income from other sources. IFOS related, sir, family pension. Family pension SSC, sorry, sir, employee expired. Once employee is expired, the pension is being paid to the wife of employee. Once the pension is being paid to the wife of the employee, then that is called as what? Family pension. So there is a sir, family pension is taxable under IFOS because employee expired, his wife is receiving pension. Wife is not the employee. So okay, there is no employer-employee relationship between employee's wife and employer. Okay, that's why it is taxable under that IFOS. So there also there is a changer. Normally with respect to family pension, deduction is available. This is deduction, sir. Deduction, I mean, let's say family pension they got is like 50,000. From there 15,000 or actual, whichever is lower can be claimed as deduction. I mean, that could be exempted or can be claimed as subtraction. But whereas under new regime, sir, the deduction available is like 25,000 or actual, whichever is lower. Other incomes, there is no such kind of difference. Then tax rates on AOP, which consisting only companies as members. Sir, for AOP, sir, all the persons in that company are like, all the persons in that AOP are like companies only. So AOP means association of persons. Per one company, one individual, one firm also can make as an AOP. 3 different companies also can make as an AOP. If it is an AOP where all the members are like companies only, in such case the tax rates would be different. Okay, normal AOP the same individual kind of slab rates only, but this is an AOP, all the members are like companies only. Then the tax rates are like total income up to 50 lakhs, the tax rate is nil. 50 lakhs to 1 crore, the tax rate is 10%. Above 1 crore, the tax rate is 15%. So up to 15 lakhs, up to 50 lakhs, nil. 50 to 1 crore, the tax rate is 10%. Above 1 crore, the tax rate is like 15%. Okay. Surcharge rates remain like the normal one only. There is no change about the surcharge rates. They remain normal only. Okay, it is on both old and new regimes. Sir, this is the basics part, sir. Again, to solve separate questions is not required, sir, because the questions to be solved are like marginal relief only. Marginal relief related examples wherever is needed, we already solved the examples only. So for the first chapter, you need not even required to open the workbook also. These examples whichever given here are sufficient here. First chapter, what? Okay, so first chapter, sir, if you separately identify a question, you will find out only one MCQ in the paper, but this tax calculation part is relevant for 4 or 5 different questions also. Okay, we'll take a break, sir. Okay, so there's a 15 minutes break, sir. Post break again will continue. Okay. So we are starting now with the deductions chapter. Deductions under chapter 6A. So the first basic points are here. The deductions can never exceed the gross total income. All the deductions together can never exceed the gross total income. Aggregate of all deductions shall not exceed gross total income. Then no deductions under chapter 6A is allowed from the gross total income to the extent it includes capital gains under 112A, 111A and casual income. So I mean deduction, the first thing is like you cannot claim more than that of gross total income. Second one, even though you have gross total income, if the gross total income consists of special rate taxable incomes, on those special rate taxable incomes also you can't claim deductions. Let's say, see here, sir, long term capital gain is a special rate chargeable income, 112. Sir, here include this one also, includes capital gains under section 112, 111A, 112 and casual income. Even 112 also has to be included. Okay, 112 also add there. Long term capital gain is under 112. Salary, general rate income, lottery income, again special rate income 30%, 1 lakh. So the total gross total income they are having is how much? 6,50,000. But from there, this fellow is having chapter 6A deductions of 3, 80C, 80D, 80EA. All together he is having deduction of 3,50,000. Okay, but he cannot claim 3,50,000. Why? Because he, out of his gross total income, the general rate taxable income is only 2.5 lakhs. The other 4 lakhs is related to special rate income. On special rate incomes, you can't claim chapter 6A deduction. So even though you are having 3.5 lakhs here, it is restricted to 2.5 lakhs only. So the net total income will remain to be 4 lakhs. Okay. So 2 points are, first one, the overall total of deductions cannot exceed gross total income. Second one, even though the deductions amount are within gross total income also, if the gross total income consists of special tax rate applicable incomes, to that extent you can't claim deductions. Okay, so next, deductions. Deductions are of two types, expense and investment linked, and the next one is like incomes and savings linked. That means, sir, LIC premium you paid. LIC premium when you paid, it's a saving kind of or like an expense kind of. There's only outflow. There's no inflow. So that means when you paid LIC premium, there's no corresponding income there. But still you can claim it as deduction. Okay. You invest in mutual funds, you pay 80D medical expenditure or medical insurance premium you have paid. All these are like expenses to you only. But still you can claim them as deductions. So straight away, even though the corresponding income may not be there, but chapter 6 straight away will be claiming deduction. Second one is like income kind of or savings kind of, like savings bank interest. So savings bank interest when you have, it's an income first, taxable under the IFOS head. Let's say your savings bank interest of 30,000. So first under IFOS head, you will take savings bank interest 30,000. Then under chapter 6A again under 80TTA, you will claim deduction to the extent available. 10,000 it is available. So 10,000 you will be claiming as deduction. Okay. In respect of payments, first category, straight away will reduce from gross total income to the extent allowed, 80C, 80D. These are examples. Income and savings linked. In respect of incomes, first include such income in respect to head interest includable in IFOS and claim deduction to the extent allowed. So 80TTA is allowed up to 10,000. So 10,000 will be claimed as deduction. Then these following deductions can be made only when the return of income is filed on or before the due date. So there are a list of deductions which can be claimed only when the return is filed. Sir, here let's say for an SSC tax audit is applicable. Then first the tax audit report has to be filed. then subsequently return of income has to be filed. Okay, so tax audit report may be filed belatedly, no problem, but return of income has to be filed on time only to claim these deductions. A belated audit report can be filed, but return of income should be on or before the due date. Okay, so once the return is not filed by the due date, then all these deductions can't be availed. What are those? 80 I series. I series na IA, IAB, IAC, IB, IB, IE, not much important for us, like I series. Then 80 JJA, a newly introduced one, we'll be discussing. 80 JJA, 80 L, M, P, QQB and RRB. Sir, QQB, RRB will come mostly again repeatedly in DTA chapters. Okay, 80 JJA, JJAA, LA, ATM, ATP. Okay, so these 3, 5, 7 deductions. JJ, JJAA, L, M, P, and then QQB and RRB. These deductions can be claimed only when the return of income is filed on or before the due date. Audit report may be belated, but the return should be within the time limit or within the due date. So now we're going into the deduction, sir. The first one we are starting is with 80CCE. 80CCE is a section which gives the combined limit for 80C, CCC and CCD subsection 1. Okay, 80CCE is a combined total limit which is given for C, CCC and CCD subsection 1. So first we'll discuss about 80C. So all these 3 sections together also the deduction can be availed is how much, sir? 1,50,000 only. Individually under 80C also they'll say like 1,50,000. CCC also they'll say 1,50,000. CCD subsection 1 also there is a limit of 1,50,000. Okay, 3 1,50,000 is na, it doesn't mean again 4.5 lakhs. All the 3 together also the deduction available is 1.5 lakhs only. So first 80C related. Who is the one eligible to claim deduction under 80C, sir? Individual and HUF. Maximum amount is like 1,50,000. Let's say the first one is like life insurance premium paid. For whom the premium can be paid? For himself, spouse and children. Children could be major or minor. Children could be major or even minor. Major or minor. And for parents not available, sir. Here life insurance premium paid for parents is not available. For parents not available. It could be paid for major and minor, and for if it is paid for parents, it is not available. HUF, it could be paid for any members. So how much? Sir, life insurance premium, let's say the policy tenure is like 30 years. So 30 years, every year you will be paying the premium. So every year on payment of premium, you can avail a deduction. After 30 years, let's say the policy got matured and you got the sum insured. Then the sum insured is taxable in the year of receipt. Usually there are exemptions available when the life insurance money is received. Throughout the policy tenure, SSC will be paying premium. So then every year it is allowed as deduction. Maturity time, sum insured along with if any bonus and interest is paid, that is eligible for exemption. Okay, it is an income only. It is an income, but it is exempted under section 10(10)(d). The question is, how much deduction is available? So the deductions are with respect to life insurance premium. There was so many amendments happened. So before 1st April 2012, if the policy is taken before 1st April 2012 and still you are paying premium, then the deduction available is like 20% of the sum insured or actual premium paid, whichever is lower. Let's say, sir, the policy is for 30 lakhs and the premium you paid is like 1 lakh. The premium you paid is like 1 lakh. How much you can claim as deduction, sir, if it is before 31st March 2012? Premium paid 1 lakh or 20% of sum insured na 6 lakh, whichever is lower na 1 lakh. Policy issued on or after 1st April 2012. Then premium paid 1 lakh or 10% of sum insured means 3 lakhs, whichever is lower na 1 lakh. Then from 1st April 2003, sir, they again categorized normal persons and disabled person. For disabled person, the premium will be much more high. That's why for disabled person, the deduction available is like actual premium paid or 15% of the sum insured, whichever is lower. Premium paid or 15% of sum insured, whichever is lower. So life insurance premium related deduction is available to individual and HUF. He could be a resident or non-resident also, because they didn't mention specifically as like resident, na? So both resident and non-resident it is available. Then how much is the deduction, sir? Before 2012, 31st March 2012, it is like 20% of sum insured or actual premium paid, whichever is lower. After 1st April 2000, on or after 1st April 2012, 10% of sum insured or actual premium paid, whichever is lower. Then if he, from 1st April 2013, if he is a disabled person, how much is the deduction available, sir? 15% of the sum insured or actual premium paid, whichever is lower. Then first one, sir. So the first under ETC, there are number of investments you can make. Okay. Any kind of investment you make, it is eligible for deduction, maximum 1,50,000. Out of them, one point we discussed is like life insurance. Second one, contribution to unit linked insurance plan. So these days, sir, normal traditional insurance plans are not taking. All the majority are like unit linked insurance plans. I mean, out of the premium you paid, a part will be taken for risk. The balance will be invested on behalf of you in units. Okay. Now, let's say on sake of me, let's say I paid premium of 50,000. 10,000 is allocated for risk. 40,000 they'll invest somewhere. Whatever they'll get, that amount will be paid to me. Okay. So that is like unit linked insurance plans. Compared to the traditional LIC plans, in unit linked insurance plans, the return will be much more higher. So for them, unit linked insurance plans. Then premium for contract of deferred annuity scheme. Sir, it's not employee, just a deferred annuity scheme. Contract premium for contract of deferred annuity scheme. Under a deferred annuity scheme, if any premium is paid, deferred annuity. Sir, okay, deferred annuity, na, sir, they'll be paying like sir, annuity means they'll be paying it like a lump sum amount. Okay, so you'll be paying on retirement, you want some lump sum amount. That's why you'll be contributing to this kind of annuity plans and all. So when you contribute to deferred annuity, then where employee is making contribution to PPF, SPF and RPF. What are these? PPF means Public Provident Fund. Public Provident Fund. Whereas SPF means Statutory Provident Fund. RPF means Recognized Provident Fund. So to these funds, sir, if individual is contributing for himself, spouse or child, eligible for deduction. Where HUF is contributing for any member of the HUF, eligible for deduction. Okay, sir, but I understand SPF and RPF contributions can be made only for SSE himself. PPF contribution alone can be made for spouse and children behalf, and even HUF also can contribute on the family behalf. Okay. Then contribution to any approved superannuity fund, it is also a retirement kind of. Any sum paid or deposited to Sukanya Samruddhi account. Okay. To control this like underage girl child marriages, they have introduced something called Sukanya Samruddhi account. So under Sukanya Samruddhi account, the father or the parents can deposit some amount into the Sukanya Samruddhi account from the early age of the child itself. So by the time she gets 18, that balance in the Sukanya Samruddhi account will be eligible or will be enough for her to get her higher studies and all. So that's why they introduced Sukanya Samruddhi account. Any amount paid or deposited to Sukanya Samruddhi account is also eligible for ATC deduction. Subscriptions to National Savings Certificate, and then contribution to approved annuity plan of LIC, contribution to notified units of mutual fund. Then this is important, sir, again, payment of tuition fee of university, college or school fee. Sir, in this modern like let's say for a medical seat or for even some high end or the highly reputed B schools kind of, the fees will be around like 30 lakhs, 40 lakhs. Even in some schools also these days, like these are like top end schools like Delhi Public School, these kind of schools also, the fees would be yearly like 3 lakhs to 4 lakhs, that kind of fees is there. But everything is not for education. There, some 1 lakh or 60,000 might be for the education. The balance is like they'll be collecting for building fund, corpus fund, okay, bus fee. So different names they'll put. Out of all those, the tuition fee component alone is eligible for deduction. Okay, and then it should be a full-time education, and it should be in India. And if it is for children, maximum 2 children related only, you can claim the deduction. Okay. Then repayment of housing loan, where any housing loan repayment is being made. Sir, interest related you will claim deduction under the house property only. Interest related deduction. We are not talking about house property loan related interest. The principal part repayment also can be claimed as deduction under 80C. The principal, the loan might be taken for house price, stamp duty value, registration charges all together. Sir, house value is 40 lakhs. But to register it on the owner name, another stamp duty registration charges happen for 5 lakhs. So now the loan could be for how much? 45 lakhs. Out of this, how much ever is paid? Okay, the repayment of amount borrowed will be eligible for claiming 80C deduction, provided it should be borrowed from government, bank, or a society, life insurance corporation, or government employer. If the loan is taken from a friend or from relatives, then that is not eligible for 80C deduction. Then subscription to certain equity shares and debentures, investment in 5-year term deposits, scheduled bank, 5-year term deposits, okay, recurring kind of deposits, sir. Every month on month you will be contributing to those deposits. Subscription to notified bonds issued by NABARD, contribution to National Housing Bank, and then investment in 5-year post office time deposit, post office 5-year savings bank, and deposit in senior citizen rules. All these are eligible for deductions under 80C. There is one more point also, sir, 18th one. Contribution by central government employer to 80CCD Tier 2 fund. 80CCD Tier 2 fund. Sir, 80CCD is about NPS, National Pension Scheme. Okay, under 80CCD they have created a trust, okay, and a fund also. Now every person, sir, the point understand, sir, 80CCD has 2 types of funds, Tier 1 fund, Tier 2 fund. Tier 1 fund, it has restrictions. What kind of restrictions? Once you contribute to that fund, you cannot remove those funds until the expiry of a time period mentioned. Okay, whereas Tier 2 fund, it is like flexible. Whenever you want, you can withdraw the money from Tier 2 fund. Okay, so mostly the deductions are available only with respect to Tier 1 funds. But this is the only point where they have even provided deduction with respect to Tier 2 fund also. But the person who is contributing is like a central government employee, and when he contributes to 80CCD Tier 2 fund also is eligible for 80C deduction. Okay, now all these are more, okay, not frequently asked in exam, sir. So out of all these, like which are being frequently asked in exam, life insurance one anyhow important. First one, life insurance one important. Then this PPF related SPF, RPF will come frequently. Then tuition fee point will come frequently. Housing loan point will come frequently. Post office term deposit one thing. And then deposit in subscription to certain equity shares and debentures. Okay, so which will come most regularly, sir? 1, 4, 10, 11, 12, 16. One is like life insurance premium paid, contribution to PPF, SPF and RPF. Third one is like payment of school fee or tuition fee. Next one, repayment of housing loan, subscription to certain equity shares and debentures. The next one is like 5-year term like post office savings scheme type time deposit. Okay, so these are the 80C related deductions. All these investments you made, but still the maximum deduction available is like 1,50,000 only. Then 80CCD, deduction with respect to contribution in pension scheme, NPS, National Pension Scheme. Sorry, before this, sir, 80CCC, contribution to pension fund of LIC, eligible assessee is like individual, where any contribution to pension fund of LIC is made, then the deduction available is like maximum of 1,50,000 and deduction is available only to individuals. Then sir. So this 80CCD, it got missed there. You just write down towards the end of the chapter 80CCD. So while formatting it got deleted. So towards the end of the deductions chapter, you will find some half page place. So here you could write down the 80CCD part. What is 80CCD? Deductions with respect to, first listen sir, then I'll give 5 minutes time so that you could write down. Deduction with respect to contribution in pension scheme under NPS. Sir, one of the complicated sections, sir. Listen it carefully. Under 80CCD, there are 3 subsections. 1B, 80CCD, subsection 2. 80CCD 1, 1B, 80CCD, subsection 2. It's like national pension scheme. Originally, it is brought for self-employed, because for normal employees and all, they have statutory provident fund, recognized provident fund and all. So they are contributing to those kind of funds. And then their retirement is being secured. But then India, like the afterwards, there is a change in India. I mean, there is a change in the Indian economy structure itself. Many service sector jobs also has been created, which were like self-employed kind of. There are so many like carpenters are there, so many plumbers are there, like CS, CMS, doctors, many self-employed people are there. These people also will retire at a point of time, but their retirement is not secure. That's why they introduced a plan called 80CCD. But then this 80CCD pension fund is giving more returns than that of the traditional provident fund and all. So then even the employees also shifted to this 80CCD pension fund only. So originally it is designed for self-employed. Now majority of normal employees are also employees and employer also being participated in this 80CCD pension funds only. Okay. So now to a pension fund, employee will contribute and even employer will also contribute. So under this section, deduction is available for both employees contribution as well as employers contribution. So okay. See here sir. 80CCD subsection 1 is about employee contribution and 1B is also about employee contribution. Whereas subsection 2 is about employers contribution. Okay. First 80CCD subsection 1 will see sir. If he is a salaried employee, the amount actually contributed by employee or 10% of his salary. Salary means basic plus dearness allowance, which is forming part of retirement benefits. Out of this, whichever is lower can be taken as deduction. Sir, I'm a employee of an organization and I'm participating in 80CCD pension fund. How much deduction? The amount I contributed or 10% of salary, whichever is lower. Salary means basic plus DA forming part. Then, if I'm a self-employed, how much is deduction available? Actual or 20% of gross total income. Actual or 20% of, because self-employed na no salary will be there. That's why actual or 20% of gross total income, whichever is lower. Okay. Now 1B. What 1B says? It gives me the same employee's contribution only. Additionally, I can take another 50,000 as deduction. But when? Sir, we have 3 sections: 80C, CCC, CCD, 1B. All the 3 together we can claim deduction of maximum how much? 1,50,000. They have given so many plans as of now, so many investment options now. But all together the deduction available is how much? 1,50,000 only. So now look at this example, sir. An employee is having salary of 25 lakhs. Okay. And he has contributed how much? 1,80,000 to NPS. No other 80C is not there, 80CC is also not there. But still 25 lakhs into 10% now how much sir? 2.5 lakhs or 1,80,000. Whichever is lower means how much? 1,80,000 he can claim. But 80CCD 1 related, there is a cap of 80CCE. which says like maximum how much you can claim, 1,50,000. Okay, now this unutilized or the part of the amount which can't be availed because of 80cc limit is there na, that 30,000 you can claim under 80ccd 1b to a maximum of how much, 50,000. So let's say I have contributed here 2,20,000. I have contributed here 2,20,000. How much? 25 lakhs into 10% means 2.5 lakhs or 2.2 lakhs. Whichever is lower means how much? 2.2. But under 80ccd1 I can claim only 1.5 lakhs. Out of the balance 70, under 1b I can claim another 50,000. The other 20,000 is lapsed only. Okay. Can claim 1,50,000 only because of 80cc. Balance 30,000 can claimed under 80ccd 1b. Now, second case. Salary 10 lakhs. Employee contribution is like how much? 1,30,000. Salary is like 10 lakhs. Employee contribution is how much? 1,30,000. How much is the deduction available? 10 lakhs into 10 percentage now 1 lakh or 1,30,000. How much I can claim? 1 lakh only. Sir, here the problem is not because of 1.5 lakhs cap. The problem is because of 10 percentage cap. So now you contributed amount to NPS because of the 1.5 lakh cap or because of the 10 percentage cap. Because of any of these restrictions, if any amount can't be claimed as deduction, that amount you can claim as deduction under 80ccd 1b to a maximum of 50,000. Okay, sir, amount contributed to NPS can be claimed as deduction under 80ccd 1. But there are two restrictions. One is 1.5 lakhs limit. Second one is like 10 percentage cap. Because of any of these two restrictions, you can't claim deduction there. That amount which can't be claimed as deduction can be claimed under 1b, but to a maximum of 50,000. So here 1,30,000 you actually contributed, but because of the 10 percentage cap, you can claim deduction how much, sir? 1 lakh only. 1,30,000 or 10 percentage of 10 lakhs now 1 lakh. Here 1 lakh can be claimed under 80ccd subsection 1, whereas 30,000 actually contributed can be claimed under 80ccd 1b. Sir, able to understand these two, sir? 80ccd and 1b both are related to what? Employees contribution. But first will claim under 80ccd 1. Because of any of these restrictions, you can't claim under 80ccd 1, then that excess amount can be claimed under 1b to a maximum of 50,000. Okay, then 80ccd subsection 2. It is altogether about employer's contribution. So first understand. Employer contribution, na, whether it is your money or employer is giving you. Employer is giving you. First, it is the income to you. So the employer contribution included in the salary. Then again you are claiming it as deduction under 80ccd subsection. Sir, simple thing, sir. The pension fund is for my benefit. If I am contributing on my own, then it's an expense kind of. Later on, I'll get some benefit. If employer is contributing on behalf of me, then it is an income for me now also, and afterwards also it would be. So first, since employer is contributing on behalf of me, first I'll recognize it as an income under that salaries, because employer paying on behalf of me. Then again under chapter 6A, I'll be claiming a deduction also. So first take it as an income under salaries, then the deduction is like, for government employer, it is like actual or 14 percentage of salary, whichever is lower. Others na, it is actual or 10 percentage of salary, actual or 14 percentage of salary. When 10 percentage, when 14 percentage. Sir, understand, chapter 6A deductions are not available to new regime. Only few deductions which will be specifying are alone eligible for new regime or the default regime. One among them is 80ccd subsection 2. 1b are not available. Only 80ccd subsection 2 is available. What is 80ccd subsection 2? Employer's contribution to employees NPS. Okay. If it is under new regime and is not a central government employee, then actual or 14 percentage of salary can be availed as deduction, whichever is lower. If it is under old regime, na, actual or 10 percentage of salary, whichever is lower, can be availed as deduction. So 10 percentage if it is under old regime, 14 percentage if it is under new regime. So this part, sir, it's being missing. So you can copy there. Deductions with respect to contribution in pension scheme or NPS. Yes, if he is non-government employee, then actual or 10 percentage. Old regime. New regime na actual or 14 percentage, whichever is lower. Actual or 10%, whichever is lower in the case of old regime. Actual or 14%, whichever is lower in the case of new regime. So then 80 CCH, it is about contribution to Agnipath scheme. So it is to Agniveers. So again there is a typo mistakes are there. Agniveers it is. Agniveers na army people. So under Agnipath scheme also there are two sections are 80 CCH1, 80 CCH subsection 2. CCH1 SSC himself is contributing, I mean employee's contribution. 80 CCH subsection 2 na employer, the government is contributing on behalf of the army person. SSC individual enrolled in Agnipath scheme, what is the deduction available amount he contributed to the scheme? There are no caps and all. How much ever he contribute, that can be claimed as deduction. The contribution, then 80 CCH subsection 2 is like the contribution made by central government on behalf of SSC. Deduction is available to the extent of amount contributed, available in both the regimes. Sir, now 80 CCD subsection 2 and 80 CCH subsection 2 both are available under new regime as well as under old regimes. Okay, CCH2 is also about employer's contribution with respect to army people who has enrolled under the Agnipath scheme. CCD subsection 2 is about NPS scheme. Then we are going to 80D, deduction in respect of medical insurance premium paid or contribution to national health scheme. Sir, again at last also I'll again summarize which are available only to the new regime. deduction. Sir, 80CCH is a separate one. For the 1.5 lakh cap, we should check only 3. ATC, CCC and CCD subsection 1. 1B, ATCCD, CCD subsection 2 are over and above the 1,50,000 limit. Deduction in respect of medical insurance premium paid or contribution to national health scheme covered under 80D. I mean, encouraging the medical insurance premiums and all. That's why. Eligible SSC, individual, for whom the policy can be taken, sir, for himself, spouse, dependent child, parents, dependent or not. Sir, LIC, medical insurance, there is a difference. LIC can't be taken for parents. If taken for parents also, no deduction is available. Medical insurance taken for parents, deduction is available. Then, life insurance taken for minor children or major children. Major na, it could be even dependent or independent also. But still deduction is available. But for medical insurance premium, if it is taken for children, children should be dependent. Then only deduction is available. SC could be resident or even non-resident, no problem. HEF na, it could be taken only for any member. So what is the deduction available, sir? Where individual has been taken for himself and family. Sir, family na here excluding parents. Okay, so for himself, spouse, children. What is the amount available, sir? 25,000. Out of these people, if any one of them is like senior citizen, he or his wife, any one of them is like senior citizen, then the amount is 50,000 instead of 25,000. Then for parents also there is another 25,000 limit is available. If any of the parent is like senior citizen, then the limit is like 50,000 instead of 25,000. And then for HUF also, for all the members together, it is like 25,000. If any member of HUF is like senior citizen, then the amount is like 50,000. Then there is another amount, another deduction available for preventive health checkup. Sir, here also again, it is not 50, it's just 5,000 only. Preventive health checkup. Amount spent on preventive health checkup. How much deduction is available, sir? 5,000. Now, understand, let me take an example and tell. Sir, there is a person named Ganesh. He has taken medical insurance for him, wife, children, 25,000. And he incurred 4,000 on preventive health checkup. Now, for preventive health checkup, 5,000 is the limit. Whether this 5,000 is over and above the 25,000 or within the 25,000. This is within the 25,000. So, altogether, the deduction cannot be more than 25,000. But within that, the preventive health checkup, the sublimit is like 5,000. Let's say a person spent on preventive health checkup 8,000. But still the deduction is available only up to 5. Okay. This 5,000 is not an additional limit. It is within the 25 or 50,000 limit. Mode of payment. How it has to be paid, sir? It has to be paid in any mode other than cash, except for preventive health checkup. Okay. The amount can be made in any mode other than cash, except for preventive health checkup. So preventive health checkup related can be paid in any mode, whereas the other payments can be made in any mode other than through cash. It could be account pay check, plain check, or simple cross the check also. Okay. For senior citizen who is unable to get medical insurance, up to 50,000 actual medical expenditure also can be claimed as deduction. He is a senior citizen, no company is offering him a medical insurance policy. Then up to the actual amount spent on medical expenditures also can be claimed as deduction, but up to 50,000. Then where the premium is paid in lump sum. Lump sum na for 10 years at a time 5 lakhs has been paid. For 10 years at a time 5 lakhs has been paid. But since the cap is only 50,000, if you have in a single year the deduction, you can't get the maximum benefit. So what they are saying, like where the premium is paid in lump sum, then the premium could be spread across the tenure. Total premium divided by number of years. Total premium can be taken as deduction each year subject to the 25,000 and 50,000 limit. Let's say, sir, 5 lakhs has been paid and it is for 10 years. So for every year, how much it is like 50,000. So whether that 50,000 is within the limit or not, we should check. Senior citizen na within the limit, total 50,000 can be claimed. Otherwise, 25,000 alone can be claimed. Then 80DD. 80DD, medical treatment of disabled dependent. Eligible SSE. Who is eligible SSE, sir? Resident. He is a resident individual. And the disabled person is spouse, children, parents, brothers or sister. SSE is not disabled. The dependent on SSE is disabled. Either it could be spouse, children, parents, brothers or sister. Okay, brothers and sisters. For resident HUF na, it could be any member who is suffering from the disability. How much is what they should do, sir? They should be spending money on medical treatment, or they might be contributing for insurance scheme for maintenance of the dependent disabled child. So let's say dependent disabled. Let's say the child is suffering from a disability. Now parents want to secure his future even after they expect. That's why the parent has taken a insurance policy on the name of disabled child. Okay, so they might be spending for treatment or maybe paying premium for an insurance scheme. The deduction available is like here flat deduction, sir. Flat deduction means irrespective of amount spent, the deduction is available. Okay, for the treatment they spend only 25,000, but still how much deduction they could avail? 75,000 can be availed as deduction. But however they spent for treatment 1 lakh, but still the deduction available is how much? 75,000 only. Okay, and then if it is a severe disability, I mean when the disability is greater than or equal to 80%, then it is called as severe disability. Deduction available is 1,25,000. Sir, here understand the deduction is flat deduction. Actual amount spent may be less than these caps, but still the deduction can be availed flatly as 75,000 and 1,25,000. What is other than severe disability na 75,000. Severe disability means 1,25,000. Let's say individual has taken a policy, but that dependent disabled expires before the individual. Okay, on whose behalf the policy has been taken, that disabled person only expired before the SSE or individual. Then in such cases, whatever the insurance scheme money received, that would be treated as deemed income and taxable to the individual himself. Then 80U. Sir, 80DD and 80U has similarities. The similarity is like both are related to disabled only. 80DD na dependent is disabled. 80U means SSE himself is disabled. Okay, but understand, sir, for the same disability, for a single person disability, deduction can't be claimed under 80DD and 80U. Okay, let's say, sir, X is the person disabled. Okay, and Y can't claim, if X is claiming deduction under 80U, since he himself is disabled, he can claim under 80U. For the same disability, his wife or his parents, someone else can't claim the deduction by stating under 80DD. Okay, so eligible SSE, resident individual with a certified disability. So here also resident, sir. So disability related deductions are available only to resident. Deduction, here also flat deduction, sir. 75,000 in normal case. Severe disability na, it is like 1,25,000. So these are like flat deductions. Condition, along with return of income, they should even provide the copy of medical certificate. For the same disabled, for same, sir, that is for same disabled person, 80DD and 80U both are not available. Only under one section they can claim. Then 80DDB. This is deduction with respect to medical treatment for specified disease. SSE is a resident individual or resident HUF. So both the cases, sir, it should be resident. So 3 sections are till now which we got where they are specifying as like resident. One is like disabled related, second one is like specified disease related. Now who could be suffering with specified disease, sir? SSE himself, spouse, child, parent, brother or sister who should be dependent. HUF na, it could be any member. How much deduction is available, sir? If the one suffering is a senior citizen, so again sir, correct it, other than senior citizen here. Second one is like senior citizen. First one is like other than senior citizen, second one is like senior citizen. Okay, what is the quantum of deduction? If SSE, the person suffering with specified disease is other than senior citizen, then the deduction available is 40,000 or actual expenditure, whichever is lower. If he is senior citizen, then the deduction available is like 1 lakh or actual expenditure, whichever is lower. Sir, here it is not flat deduction. Only in case of disability, flat deduction is available. If it is treatment for specified disease, based on the age of the disease, age of the person who is suffering with the specified disease, if he is a senior citizen, actual or 1 lakh, whichever is lower. If he is other than senior citizen, 40,000 or actual, whichever is lower, can be claimed as deduction. 80 DDB. So now, to revise once again quickly. First, we started with what, sir? The basic thing. The total deductions cannot exceed gross total income. First point. Even though they don't exceed gross total income also, where the gross total income consists of special tax rate incomes, on them deductions can be claimed. With respect to normal rate taxable incomes only, we can claim deductions. Then there are certain list of deductions: 80JJA, 80JJA, 80LA, 80M, 80P, QQB, RRB. Those can be claimed only when return is filed. Audit report can be belated, but return has to be filed. Then we discussed about 80CCE for C, CCC and CCD subsection 1. All these three together, the maximum deduction that can be claimed is 1,50,000. Then we went to 80C. Under 80C, what we have discussed? Life insurance premium related, the deduction that could be okay. So 80C, life insurance premium related. The premium could have been paid for SSE himself, spouse, children minor or major, parents not included. HUF any member. What is the deduction available, sir? Depending on when the policy has been taken. If the policy is taken before 1st April 31st March 2012, then it is like 20% of the sum insured or actual premium, whichever is lower. After on or after 1st April 2012, 10% of sum insured or actual premium. Then disabled from 1st April 2013, 15% of sum insured or actual premium paid, whichever is lower. Okay. Then contributions to PPF, RPF and SPF. Okay. SSE can be contributing for himself, spouse and even children also. HUF any member can be claimed as deduction. Tuition fee. Education should be within India. Full-time education. Maximum of 2 children allowed as deduction. Housing loan principal repaid. Okay. The loan could be taken for house, the amount paid and even for the registration and stamp duty charges together. Loan should have been taken from the banks, societies and from this employer, government employer alone. If it is taken from any other person, deduction is not available. Post office 5-year term deposit and certain equity shares and mutual fund, certain debentures invested also eligible for deduction. ADCCC, pension fund of LIC, 1,50,000. ADCCD. ADCCD is about NPS scheme. There are 3 parts there. 1, 1B, ADCCD subsection 2. Where the amount is contributed, by employee, that is covered under 1 and 1B. Okay. First we'll check under 1. ADCCD subsection 1. How much is allowed? Actual amount contributed or 10% of salary. Self-employed. Actual amount contributed or 20% of gross total income, whichever is lower. Here, because of 1.5 lakh cap or because of this percentage cap, if any amount contributed to the fund but can't be claimed as deduction there, such extra amount can be claimed as deduction under 1B to a maximum of 50,000. Then ADCCD subsection 2, employer's contribution. Where employer is contribution, the deduction allowed is like central government employee other than central government employee. Central government employee, actual or 14% of salary, whichever is lower. Other than central government employee, then again, old regime, new regime. Old regime means actual or 10% of salary, New regime means actual or 14% of salary. That is 80cc-D. Then we went to 80cc-H, Agniveer scheme. Okay, army people. So when such employee himself is contributing, how much ever he contributed, eligible for deduction. Where central government is contributing on behalf of him, then also amount contributed is eligible for deduction. But the central government contribution part is eligible for both new regime as well as old regime. Then we went to medical insurance premium. Medical insurance premium can be paid for assessee himself, spouse, children only when they are dependent, parents dependent or not. Okay, for all of them they could be paid medical insurance premium. HUF na any member. So usually the deduction available is up to 25,000 for individual and is micro family. Micro family na parents and spouse and children. For parents separate 25,000 is there. If any of them is like senior citizen, then instead of 25,000 the limit would be 50,000. If they have preventive health checkup also, then for preventive health checkup there is a sub limit of 5,000. That 5,000 is not an extra limit. Within that 25 and 50,000 is only the 5,000 is a sub limit. Other than preventive health checkup related expenditure, all the other things has to be paid through other than cash. Then if lump sum amount has been paid, then the lump sum amount has to be apportioned among the tenure, and such installment amount you need to check whether it is within the limit or not. If his age is more than 60 and no insurance is being provided, then in such case actual medical expenditure also can be claimed up to rupees 50,000. Then we went for 80 DD and then 80U. Okay, disabled. So DD related na SSE is not disabled, dependent is disabled. 80U means SSE himself is disabled. What is the deductions available, sir? Severe disabled na 1,25,000, whereas general disability means 75,000. Then we have discussed about specified disease. Okay, what is specified disease, sir? So Rahul said like specified disease means दिल धड़कने वाली बीमारी. ఓకే, గుండె. ఓకే, తెలుగులో అయితే గుండె జల్లుమంటదని. ఇట్స్ ఓకే. I mean, you'll get scared by listening to that name itself. Cancer, TB, paralysis, those kind of. So normal fever, cold na, so you'll be okay, right? So those one. Yes, one more thing. Sir, one more thing, sir. Here also, under 80D, senior citizen. Sir, in the first chapter, if you remember, for senior citizen, if he is resident only, 3 lakhs additional slab is applicable. Even here also, if SSE is senior citizen and being resident only, 50,000 extra cap is applicable. If he is a non-resident, then 25,000 cap is only applicable. So write down it clearly, sir. SSE is a senior citizen plus non-resident, then 25,000 is the limit. 50,000 is not available, 25,000 is only available. If SSE is a senior citizen and non-resident, then 50,000 is not available, 25,000 is only available. Specified disease na, then senior citizen means 1 lakh or actual expenditure, other than senior citizen means 40,000 or actual expenditure. Okay, sir, again here you need not to check whether senior citizen resident or not, because first of all 80 DDB is available only when he is senior citizen. Then also 25,000 only. Yes, if at all senior citizen is being non-resident, then the limit will be 25,000 only. I mean, like the cap 25,000 to 50,000 is enhanced because of senior citizen. If that senior citizen, he need not to be SSC always. Okay, SSC in his parent might be senior citizen, or wife might be, or husband might be senior citizen. In that case, whoever is senior citizen, we will need to check whether he is resident or non-resident. If that person is non-resident, then the limit is only 25,000. Okay. Quantum of deductions are here 80 DDB, specified this is 40 or actual, whichever is lower, 1 lakh or actual, whichever is lower. Then 80E. Deduction on loan taken for higher studies. Deduction on loan taken for higher studies. Sir, here in the section itself it is there, higher studies. For LKG, UKG, if any loan is taken also, not eligible for deduction. Eligible SSC, individual, and the studies will be for himself, his education only, spouse, children also, or even for a student to whom SSC is acting as a legal guardian. Okay, higher studies na above 12th. Then loan should be taken from a charitable institution or from a financial institution. It can't be taken from friends or family. Then that is not eligible for deduction. Should be taken from charitable institution or financial institution. And then deductions can be taken with respect to interest paid, and how long the interest can be taken as deductions are for 8 assessment years. Okay, initial year, I mean the year in which loan has been taken, and another 7 assessment years. So total for 8 years, the interest paid could be taken as deduction. There is no cap on interest limit also. How much ever interest they paid, that could be taken as deduction. The conditions are like loan should be taken from charitable institution or financial institution. Education should be about 12th. And the education is for himself, spouse, children, or for any other person whom he is acting as a legal guardian. Then deductions with respect to interest on housing loan. Sir, 80E, 80EA. Okay. So both are related to housing loan only, but for a different time periods. Eligible SSC, both the cases it is only for individuals. Maximum deduction under 80E it is 50,000, EAA it is like 1,50,000. But when for to get deduction under 80E, sir, the loan should have been given in the financial year 16-17 alone. Only if the loan is taken in 16-17 alone, and still if you are paying interest, then you can claim deduction under 80E. Okay, new housing loan if you take any now also, you are not eligible for any 80E. And whereas for 80EAA, the loan should have been taken from 1st April 2019 to 31st March 2022. That means for year 1920, 2021, 21-22. In those 3 years only the loan might have been taken. Okay. And then loan might have been taken from banks and financial institutions in both the cases. In 80EE, they said like the purchase price should be within 50 lakhs. Whereas under 80EAA, they didn't say about purchase price. The stamp duty value should be within 45 lakhs. Okay, and for 80E, sir, the loan sanction amount should be within 35 lakhs. Here there is no such kind of cap. SSC does not own any other residential house property on the date of sanction of loan. I mean that is the first house he is being purchased. He don't have any other house. First time he is purchasing a house. For that he has taken a loan. Then interest can be claimed as deduction. So first understand, interest can be claimed as deduction even under house property head also. Okay, but then why he'll come to 80E and 80EAA? You should again recall the house property provision, sir. House property 2 types, self-occupied, let out. Let out property, there is no cap for deduction. How much ever interest is there, that could be claimed as deduction there itself. How much ever is interest. So for let out property, there is no requirement to come here, because the full interest can be claimed as deduction under the house property head only. If anything is there also, it will be absorbed as loss. That could be set off with any other head income. So let out property, there is no option of 80E and EAA. They didn't specifically said about that for let out property these sections are not applicable, but practically if you see, let out property interest would be claimed as deduction there itself. So they will not come to E and EAA. For self-occupied property, there is a cap. 2 lakhs only can be claimed as deduction there. So in excess of 2 lakhs, if any interest is there, that could be claimed as deduction under 80E or 80EA, whichever is the section applicable to them. Okay. So First, you should claim house property related interest deduction under 24B, maximum 2 lakhs for self-occupied. Post claiming that also, still you have interest. Then such unavailed or unclaimed interest can be claimed as deduction under EE or EAA. See, sir, self-occupied property, let out property. NAV for self-occupied property will always be nil. Don't ask me why it is nil. For self-occupied property, no income, so obviously NAV will be nil. Let out property 5 lakhs. Then first one, standard deduction, 30% of NAV. Here nil, here 1 lakh 50,000. 24B interest. The actual interest is 3 lakh 60. Actual interest paid is how much? 3 lakh 60. Whereas for self-occupied property, it is restricted to how much, sir? 2 lakhs only. So the deduction that could be claimed is 2 lakhs. For let out property, the deduction that could be claimed is like total interest, 3 lakh 60,000. So now the income from house property would be 2 lakhs loss. Here it would be 10,000 income. Why? From 5 lakhs, 1.5 standard deduction, 3.6 lakhs interest deduction. So the income from house property is 10,000 in case of let out. Whereas self-occupied, there is 2 lakhs loss. Income from salary is 8 lakhs is there, 8 lakhs is there. Sir, here also loss only, na? Sorry, here also not income, loss only, because 1.5 and 3.6 total it is like, so it would be 10,000 loss only here also. Okay. Now income from salary, he has 8 lakhs, 8 lakhs. Now total income is what? This house property loss adjusted here, assuming it is under which regime, sir? Old regime. Okay. 2 lakhs loss adjusted here, 6 lakhs. And this 10,000 loss also adjusted here, it is like 7 lakh 90,000. Now 80 EAA deduction, assuming 80 EAA has been satisfied. How much, sir? The total interest paid is 3 lakh 60. But here they can claim as deduction only 2 lakh. That excess 1 lakh 60 they can claim here. But total 1 lakh 60 can't be claimed because 80 EA said only up to 1 lakh 50. So 1 lakh 50 will be claimed here. So the net total income will be 4 lakh 50. Whereas let out property, this option itself will not come because here itself they are claiming the total interest. Then 80 EEB, interest on loan taken for purchase of electric vehicle. Eligible assessee should be individual. Quantum of deduction is like what? 1 lakh 50,000. Sir, if you see E series, they didn't said like resident or non-resident. Just said like individual. That means available for both resident and non-resident. Okay. So for what, sir, the loan should have been taken? Loan should have been taken for purchase of EV vehicle. That also in between which period? 1st April 19 to 31st March 23. From a financial institution loan. Then the benefit of deduction will be continuing till the loan is repaid every year. Till the loan is repaid, they can avail deduction. Then 80G. Donations to certain funds and charitable institutions. 80G. Sir, again, here one more complicated one is like 80G only. After 80CCD, the next complicated in deductions is like 80G. Under 80G, there will be 4 categories. Category 1, Category 2, Category 3, Category 4. So which is covered under Category 1? PM. So there will be so many list of items, sir. We are not discussing in detail. For us, they will be mentioning like some disaster related relief funds they will be mentioning. Gujarat earthquake, CM relief fund. Okay, Kerala flood relief, CM relief fund. Okay, national drought relief fund. Okay, sorry, national, such kind of CM or PM related funds will be there. Sir, if any floods are came, even these film actors and all will be contributing to the CM relief fund, PM relief fund. Okay, so those kind of funds. If they are contributed to PM CM relief fund, they'll cover under Category 1. 100% of the amount contributed is eligible for deduction. Category 2. What is Category 2? Only one fund is there, sir. PM drought relief fund. Okay, PM drought relief fund. How much is eligible, sir? 50% of the amount contributed is eligible for deduction. Now Category 3 and Category 4. Category 3 also here if you see 100% of the amount contributed is eligible for deduction. But they are saying like subject to qualifying limit. So now we need to understand what is called qualifying limit. Sir, qualifying limit means 10% of adjusted total income. So let's say the gross total income is like 50 lakhs. From that 50 lakhs, what they are saying, like they are saying to compute first adjusted gross total income. From gross total income, how to calculate adjusted? Take gross total income 50 lakhs. From there, special rate incomes are there. Subtract capital gains under 112, 112A, 111A. Okay, if any of these are there, subtract. We'll assume like 20 lakhs is there. Subtract. Then all other deductions except ATG. ATC, ATD, if any other deductions, we'll assume like 3 lakhs is there. Subtract that one. If any exempt income is there, but understand sir, technically exempt incomes will exclude before total income only. Okay, so they will not be here, so we will not consider it also. So if you subtract capital gains and other deductions and all except ATG, you got how much sir? 50 minus 23, now you got 27 lakhs. So this 27 lakhs is called what? Adjusted gross total income. How do we arrive, sir? From gross total income, we have subtracted the special rate taxable incomes like capital gain 112, 112A and 111. Then we have subtracted all the deductions except ATG. Any other exempt income is there, that also we have been subtracted. Then we got how much, sir? 27 lakhs. Now into 20% if you do, how much it is like? 2.7 lakhs. So this 2.7 lakhs is called as what? Qualifying limit. This 2.7 lakhs is called as the qualifying limit. So now category 3, what they are saying, like 100% of the amount contributed can be claimed as deduction, but subject to qualifying limit. Okay, what are these here, sir? Government or some CA na, here it's like C.E, not chartered accountancy. Here it is like charitable association. It is like charitable association. Government or a charitable association is paying for promotion of family planning. Government or a charitable association is paying for promotion of family planning or donation by a company to Olympic Association or Sports Authority, then they are covered under category 3. So category 3 na, amount contributed for promotion of family planning or to a sports association or to a Olympic association, then they are covered under category 3. Now category 4. If any amount is covered under category 4, the deduction available is 50% of amount contributed subject to qualifying limit. So what are the categories, sir, here? If the amount is contributed for any charitable purpose, for temples, for housing, sir, it is like housing accommodation. Okay, to provide housing and accommodation and to protect minority interests. For these 4 categories, if the amount is contributed, then it is eligible for deduction under category 4. Category 4 now how much, sir? 50% of amount contributed subject to qualifying limit. But category 4 is not a simple one, sir. You will understand only with an example. See. So straight away the given qualifying limit is how much? 3 lakhs. How do we get qualifying limit, sir? Adjusted gross total income into 10%. Let's say we got qualifying limit is like 3 lakhs. Amount contributed to government for promotion of family planning is 2 lakhs. It is covered under what? Category 3. Contribution to temple for renovation 2 lakhs. Category 4. So first under category 3, 100% deduction is available. So 2 lakhs is claimed because qualifying limit is 3 lakhs is there. So the claim total 2 lakhs. Now under qualifying limit 3 lakhs, first we claimed category 3, 2 lakhs. Still how much balance is there, sir? 1 lakh. So we think what? 2 lakhs into 50% means 1 lakh. So since 1 lakh is within the limit now, we'll be claiming 1 lakh as deduction under category 4. But that is not the case. How to calculate category 4 deduction, sir? Actual amount contributed into 50%, which is how much? 3 lakhs minus 2 lakhs, first one. And second one is like the balance in qualifying limit into 50%. Sir, category 4 very important. Listen everybody carefully. The actual amount contributed under category 4 into 50%. And the second one is like the balance in qualifying limit into 50%. How much is the balance in qualifying limit, sir? Originally 3 lakhs. But after adjusting category 3, you are having only balance of 1 lakh. That 1 lakh into 50% or amount contributed into 50%, whichever is lower. So whichever is lower now how much, sir? 50,000. So the deduction available is only how much? 50,000. Sir, the usual common mistake here is like they'll straight away compare actual amount contributed into 50 percentage and the balance in qualifying limit, whichever is lower. But it's not like that. Both should be multiplied with 50 percentage. Balance in qualifying limit also has to be multiplied with amount contributed into 50 percentage, qualifying limit minus category 3 deductions into 50 percentage. Both you should do. Whichever is lower can be claimed as deduction. And then, sir, if any donations are made in kind na, like for temples and all, they will be donating in the form of gold and all. Okay, those kind related donations are not allowed as deduction, and greater than 2,000 na, if the donation is like, then it should be made in other than cash. Donation in kind not allowed, and donation greater than 2,000 other than cash. Sorry, only greater than 2,000 should be other than cash, then only it is allowed. Within 2,000 na, it could be even cash also. Eligible SSC, sir, who can claim these deductions? Only if they opted old regimes, they could opt for the 80G deductions. For you, like 11 a.m. is fine, right? From tomorrow, like if you start from 11. 9 is also fine. Okay. I mean, like I heard like for SCM, like some students said like 9 would not be comfortable to them. SCM 11. IDT I took from like 9 to 6 only. Okay, it happened. Then SCM when they started, like some people said like 9 means like they are having issues to come. Okay. Okay. We'll see. 11 to 1, then we'll have 2 to 4, then again we'll have 4 to 6. So then breaks also will have time gaps also. Okay. Section 80GG, deduction with respect of rent pay. Sir, for employee, the ones who are already employed, when they are paying rent, they are getting exemption under HRA. House rent allowance related exemption they are getting. For self-employed, nothing they are getting. It's okay, no exemption. That's why if SSC is a self-employed, then for the rent paid, he'll get deduction. How much? Eligible SSC being an individual and who is not receiving HRA. The quantum of deduction available is like actual rent minus 10% of his total income. Actual rent minus 10% of total income, 25% of total income, or 5,000 per month, whichever is lower can be claimed as deduction. So here also it is like total income na, adjusted total income only. 25% of adjusted total income, 10% of adjusted total income, or 5,000, whichever is lower. 5,000 per month, sir. You should multiply it with 12. So how do we compute adjusted gross total income? Same as like that one only. Gross total income, from there subtract capital gains and subtract all the deductions except 80G, not 80G, except 80GG. The condition, sir, the accommodation which is taken on rent should be used by SSC himself or by spouse or minor children, HUF na any other member. and he should file a declaration that rent has been paid actually. Then 80 GGA, not much important, sir. These are like donation for scientific research and rural development. So any donation, any payment has been made for scientific research or rural development. You are a business person, then you will be claiming deduction under the head PGBP only. So not available here. You are not a business person, then you can claim deduction here. 100% of donation can be claimed as deduction. However, if the amount is more than 2000, should be paid in any mode other than cash. Then 80 GGB, contribution to political parties. Who can contribute? Indian company. Sir, company, for companies it is GGB. Other than companies it is GGC, Indian company. Okay. Deduction 100% of the amount, and the contribution should be made in any mode other than cash. So the contribution should be directly to the political party, or any expenditure has been incurred with respect to promotion of political party. Both are allowed as deduction to the extent of 100%. So to promote a political party, this company has incurred expenditure for promoting newspapers. 30 lakhs has been expended. The total 30 lakhs can be claimed as deduction. PGBP head, it is not allowed. There it is disallowed. Okay. Here only, okay, if any political party related expenditure has been met by a or spent by a company, that can't be taken as a business expense under PGBP. Only under 80 GGB it can be claimed as deduction. How much? How much ever they spent, that can be taken as deduction. 80 GGC. This is for other than the any persons are here. Other than what? Indian company. How much here? Any person other than Indian company, 100% of the amount contributed can be claimed as deduction. Now 80 JJAA. Sir, 80 JJA is about like yes. So this is the only deduction which is responsible for black money. Responsible for black money, but the one who are passing the bill also got elected because of it only, right? So political parties has to run. We all know that political parties can't win the elections with the as per the election commission guidelines only. Election commission guidelines, na, they could spend only some 10 or 20 lakhs. But we see like for every constitution they are spending minimum of 10 crores. Okay, so how do they bring all that money and all? So because of black money only, even for political parties also, for all those gatherings and all. $80 JJA, sir. This is like deduction with respect to profit or gains from business of collecting biodegradable waste. Okay, business of collecting biodegradable waste. So SSE, he should be into the business of what, sir? He should collect and process the waste which should be biodegradable. Okay, and use that waste for what? Generation of power, for production of biofertilizers, or for producing biogas, or for fuel like organic manure. So okay, so any of these things you should be manufacturing from this biodegradable waste. So biodegradable waste, na, like so coconut and all, the outer shelf is like a biodegradable waste. Sugar cane related from the sugar factories, once the sugar juice has been extracted, that pulp, okay, biodegradable waste. If those has been used for generation of power or production of biofertilizers, biogas, or for organic manure, such kind of industries, I mean, instead of dumping the waste, if the waste is used in a productive manner, to encourage those industries, this deduction has been introduced. 100% of their profits will be eligible for deduction. How many years, sir? For consecutively 5 assessment years starting from the year in which business has been commenced. Okay, so this is one kind of business, sir, where 100% of deduction is available, need not to pay any tax. Yes. Okay, so if you see like our 50% of income tax is crafted or drafted only because of Reliance. Okay, so Reliance is one company which is so effective at tax planning. Okay, so every time, so like I will be telling at the time of MAT also, Reliance company for the first 30 years it has paid zero tax. For the first 30 years it has not even paid any amount as tax. Okay, so it maintains always like two set of books. The depreciation which they claim in income tax would be different. For shareholders, every time they'll show profits. For the tax purpose, every time they'll show it as like loss only, and there'll not be any tax paid for 30 years. Then they introduced MAT. After introducing MAT also, for 4 or 5 years, they defeated MAT also. I mean, they countered MAT provisions also and again didn't pay taxes. Okay, government has revoked the MAT provisions also, and then again afterwards, like after like 1 year, 2 years, like when Chidambaram came as finance minister, then again he took it as a challenge and introduced MAT provisions. Okay, so then Reliance finally started paying taxes. Even after that also, that is one company which is more tax effective. Okay, they always made their structures or their plans in a way that they'll pay least taxes. Okay, so for first 30-35 years, Reliance has paid zero tax. Because of Reliance only, we had this MAT provisions chapter. Okay, because of this kind of Hindustan Unilever only, we have transfer pricing chapters. Okay, so because of all these things, initially in 1961, income tax is so simple only. But later on, so when they frame a provision, some company is defeating that provision. So to counter that, they need to make it much more elaborate, to put limits, everything. So that's why it has become so vast now. Yes, Sharanya, you're correct. That's why we are having this much restrictions and limits are there to study, I think. Those people, if they have paid properly taxes in the initial days, we don't have this much struggle. Section 80 JJA, deduction with respect to additional employee cost. Sir, again, the deduction 80 JJ is applicable only to eligible assessees. And here the assessee should be engaged in the business. He should be carrying out a business. And he should have been applicable to 44AB is applicable. 44AB is what, sir? Tax audit. Tax audit is applicable. If these two conditions are satisfied, he is into a business and then tax audit is applicable, then 80 JJA deduction can be claimed. How much, sir? 30% of employee cost. That also additional employee cost can be claimed as deduction. Sir, let's say he is paying 100 lakhs as salary. Out of them, 20 lakhs is because of additional employees. I mean new employees which have been recruited in the current year, 20 lakhs. Now this 20 lakhs already in PGBP they'll claim as expense. Because salary paid is a business expense. They'll claim as expense. Additionally, they can claim another expense also. I mean, another 30%. 20 lakhs into 30%, another 6 lakhs also they can claim deduction here. I mean, they paid salary 20 lakhs, but they can claim as an expense of 26 lakhs. Okay, 20 lakhs under that PGBP, 6 lakhs here. Why, sir, this deduction? Sir, when they claim more expense, their profit will come down. Once their profit will come down, the tax, sir, this 6 lakhs is not a real expense. Even though it is not an expense, they are claiming. There is no problem to show with the shareholders. For shareholders, profit shall not come down. For tax purpose, if profit come down also, it is fine for us. So these deductions and all will not be there in the actual P&L. So what they are saying, like in P&L, he'll be claiming 20 lakhs only salary expense. But for tax purpose, PGBP will claim 20 lakhs expense. Here additionally another 6 lakhs. So 6 lakhs profits will come down. Once 6 lakhs profits came down, tax will also come down. So he's having a tax saving or tax advantage by giving this deduction. Okay, so that it's a motivation for him to take the new employee or to recruit new employees. 30% of employee cost will be taken as deduction. How long it is, sir? Once an employee has been recruited for 3 assessment years with respect to additional expense which is met on that additional employee, 3 years he can claim it as deduction. Sir, 50 employees has been newly joined. Employee, it's not a one-time expense. Every year salary has to be paid only, every month on month. So, first year, second year, third year. For 3 years on the salaries paid, they can claim 30% as deduction, addition to that of PGBP related. Okay. So what is called additional employee cost, sir? Sir, understand, for a company, sir, on 1st April, there are like 500 employees. On 31st March, there are like only 550 employees. But during the year, 100 employees has been joined newly and 50 employees has been left the organization. Now for calculating additional employee cost, do we take 100 employees because 100 employees are actually joined in the year? No, we'll not count that. We'll check from the opening to the closing, how much increase is there? How much is there? 50 only. So the additional employee cost is only with respect to 50 employees only, not to 100. See, total emoluments paid, emoluments na, salary, allowances, perquisites, everything we call it as like emoluments. Paid exclusive to additional employees. There should be an overall increase of employee. See, beginning there are 200 employees. By the end, there are like 220 employees. 50 people has newly joined, 30 people has been left the organization. So what are the additional employees, sir? 20 only we should be taking here. Okay. Now, these 20 employees related also. If any of their emoluments paid, I mean, for our easy reference, sir, I am calling it as salary. If any of their salary is more than 25,000, then they are not applicable for this deduction. Let's say out of this 22 employees' salary is like 40,000 per month. They are not, they has to be excluded. And then if any of the employees are not participating in PF, 2 employees are not participating in PF, then they are also ineligible. Out of 20, 2 persons or 2 employees salary is more than 25,000, not eligible for this. 2 employees are not participating in PF, they are also not eligible. And then they should have worked for minimum 240 days in the previous year. When they are worked less than 240 days, then they are also ineligible. Let's say another 3 employees has worked for less than 240 days. So out of 27 employee got ineligible. 2 because of salary restriction, 2 because of PF condition, 3 because of this minimum number of days to be worked. So how many are there, sir? Now 13 employees only there. So with respect to this 13 employees, how much is the cost? You should find out. On that 30% can be taken as deduction. Employee total emoluments greater than 25,000, not eligible for this deduction. I mean, those employees has to be excluded. Who does not participate in PF? Exclude them. Who didn't work for 240 days? Exclude them. However, sir, the 240 days will be instead of 240 days, you will check only 150 days in case of footwear, apparel and leather industries. Employed in previous year 24-25, newly recruited, they worked for less than 240 days and 150 days. Then, with respect to those employees, sir, the next year would be counted as 1 year, first year, and then the 80 JJA can be availed from previous year 25-26 for 3 years. So let's say, sir, out of 20 employees, 3 employees has been worked for less than 240 days. Now for these 3 employees, current year 80 JJA deduction is not available. But starting from the next year, they can claim deduction for a period of 3 years. Okay, sir, this 80 JJA deduction is available in both old regime as well as new regime also. So till now I may refer 3 sections which are available even under new regime also. 80 CCD subsection 2, 80 CCH subsection 2, and the next one is like 80 JJAA. 80 LA. So look at this section, sir. First one. If it is a scheduled bank and it has an offshore unit in SCZ. Offshore unit, na, sir, within the SCZ, they'll have an offshore unit. And here also, foreign bank which is having a offshore unit in SCZ. Offshore unit means first of all, it's just like a branch only. So just like as how we have so many branches, SBI branches or other bank branches, it is also a branch. But it is located in SCZ and it is a offshore branch. What is the benefit of offshore branch? The normal domestic branches will be dealing in Indian currency. But these offshore branches will be dealing in foreign currencies. Let's say for example, I'm a person doing business in SCZ. I have a manufacturing unit in SCZ. Now I want to purchase a machinery from US. For that I want 1 lakh dollars as loan. The normal Indian domestic banks will be giving me loans in rupees, but that offshore bank will be giving me loan in dollars because they can deal with foreign currency. That's the difference. A scheduled bank which is having an offshore unit in SEZ, a foreign bank which is having an offshore unit in SEZ, or a unit of an IFSC. IFSC na International Finance Service Center. Sir, nothing but for financial services, it's an SEZ. Currently, we have only one SEZ, sir. I mean, one IFSC, International Finance Service Center. Sir, what does it mean IFSC? It is there in Gujarat, sir. We have currently only one IFSC. If a bank is located in IFSC, even though like geographically it was located in India, but still the operations, the rules, everything are just like as like a global bank. Okay, will not consider it as like there in India. A Singapore person wants to take loan, he can take it from the IFSC, just like as how he takes a loan in Singapore, he'll take it from the Indian bank which is located in IFSC. I mean, banks to get business from other countries also, we have started something like IFSC. Sir, usually SEZs why will start? To encourage exports, normal product exports. Banks also want to do their, banks also want to export their services. For exporting their services, a separate zone has been created which is called as like IFSC. From there, they will be dealing with foreign loans, foreign deposits, all those can be done. Okay. So, now the income is from where, sir? Income from offshore banking unit or income from business within the unit or developer of SEZ, income of units of an IFSC. For all these, the deduction is available. Deduction is like for to scheduled bank and foreign bank. 100% of profit and gains for 10 assessment year for offshore units. If it is an IFSC, then 100% income is eligible for deduction. That also 10 years out of 15 years. I mean, out of the 15 years, they can choose the deduction for any of the 10 years. Sir, for the first two, the deduction is available 10 years straight away. For all the 10 years consecutively, they need to avail. Whereas for the IFSCs, it is like choice of 10 years out of the 15 years. If any year their incomes are less, they can withdraw from this deduction, and in a year where the profits are more, that year they can claim the deduction. Then ATM, sir, this is also recently introduced, Finance Act 2024 only. Intercorporate dividends. What is intercorporate, sir? A Limited has 90% shareholding in B Limited. B Limited also has 60% shareholding in C Limited. Now, B Limited, so we are thinking from B Limited perspective. B Limited got dividend 10 lakhs and paid dividend of 8 lakhs. Now, it received dividend, the same dividend which it is received is again paying back as a dividend to its shareholders. Now, in that case, B Limited is eligible for ATM deduction. How much? The dividend received or dividend paid, whichever is lower. See, eligible SSE. Which companies are? Domestic company received dividend. How much is eligible, sir? Dividend received from other companies or dividend distributed on or before due date, whichever is lower can be claimed as deduction. Dividend received or dividend distributed, whichever is lower can be claimed as deduction. Then ATPs are not an important one. Income in respect of cooperative societies, where a cooperative society is having income from providing credit to members, cottage industry, agri produce related, purchasing seeds and livestock related, processing agri produce, collective disposal of labor, or finishing and other allied pursuits. Or for all these things, sir, 100% deduction is available. I mean, to encourage certain cooperative societies, if they are meant or related to providing credit among members, cottage industries, agriculture related, livestock or purchasing seeds related, collective disposal of labor, for all these if they form a cooperative society, then 100% deduction is available with respect to those incomes. Then if they are having any interest or dividend income, then that is also eligible for 100% deduction. Deduction on letting out income. So where the cooperative societies are having warehouses and godowns, from them if they get any income, 100% deduction is available. And then consumer any other income, sir. If it is a consumer cooperative society, maximum 1 lakh is available. Other than consumer cooperative societies, 50,000 is the maximum deduction available. Not an important one, 80P. Then 80 QQB and 80 RRB. 80 QQB, sir. (80QQB) to get deduction under 80QQB, SSE should be a individual plus resident, and he should be an author. Author na works of literature, artistic and scientific nature. I can't be claimed as an author just because I prepared this GT book. Okay, because textbooks, newspapers related and magazine contributions related royalty is not covered here. It should be of work of literature, artistic nature, scientific nature. Okay, I should have written a novel instead of this book. Then I might have got deduction under 80 QQB. Okay, individual, resident should be writing a book in the fields of literature, artistic related or scientific nature. Okay, I should have written about Earth, Mars, Sun, then scientific related, and artistic related, some kind of, okay, or literature related. Then not include textbook, newspaper, magazine. How much is the deduction, sir? When the royalty is paid lump sum, then the maximum deduction is allowed up to 3 lakhs. So they are not, okay, they are not paying lump sum. Based on number of copies of books sold, they are paying yearly kind of. Then the yearly payment, gross royalty receipt or 15% of sale value of books, whichever is lower can be claimed as deduction. Lump sum payment na maximum 3 lakhs. Actual amount or 3 lakhs, whichever is lower. Instead of lump sum amount, they are paying like yearly. How much, sir? Gross amount paid every year or 15% of the sale value of books, whichever is lower. ET RRB, deduction with respect to patent. Eligible SSE, resident individual, true and first, investor not, sir, it is like inventor. Resident individual plus he should be the true and first inventor. That patent, sir, when patent will be given? When he has discovered something new or invented something new, then he will take the patent. So he should be the first one to do that. Okay, for cycle manufacturing, bulb manufacturing, we can't take patent now. They already invented. So he should be the first and true patent inventor. Then the deduction available is like maximum of 3 lakhs. No deduction is available for sale of product with the use of patent. So okay, if any product is directly being sold, then it is not available. I have invented a new technology. For that I have taken a patent and given it to someone else. Then they are paying me lump sum amount. Then the amount they paid are 3 lakhs. Whichever is lower can be claimed as deduction. Let's say, sir, I have given this patent outside India. I am given it to Elon Musk. Elon Musk, you know. Okay, I have given it to Elon Musk. So, and he is using for his business which is outside India. And he paid everything in dollars only, foreign currency. If the amount is repatriated in 6 months from end of previous year in convertible foreign exchange, then I can avail this deduction. Otherwise, I will not be available. This deduction can't be claimed. So understand 80 QQB, RRB, both are available only to residents. If you see the resident related, specified disease related, then disabled persons related, there also it is clearly said like resident only deduction is available. Here 80 QQB and RRB also it is mentioned like only for resident only this deduction is available. And if you see 80M, intercorporate dividends, this is also available only if SSE is a domestic company. Non-resident or foreign company, this deduction is not available. Okay. So now the simple sections are 80 TTA and 80 TTB. 80 TTA is about savings bank interest for a normal individual. How much, sir? Savings bank interest deduction can be claimed maximum of 10,000. 80 TTB for senior citizen, sir, for a resident individual whose age is greater than or equal to 60 years. So TTB is also applicable only to whom? Resident. Okay, sir, if he is a senior citizen but non-resident, then TTB is not applicable. So he can claim only TTA deduction. Okay. Interest on deposits, savings and fixed deposits. Sir, again, TTA and TTB, the main difference is like, first one is like normal people, senior citizen. Here the interest would be only from the savings bank. Here it could be from savings banks as well as from fixed deposits. The maximum deduction under TTA is like 10,000, whereas TTB it is like 50,000. Okay. AOP, BOA, firm made deposit to bank, society, post office. Interest cannot be taken as deduction by member or partner. Sir, where firm made a deposit, partner can't claim deduction. So it would be in his individual capacity only to claim the deduction. Okay. So before going further, sir, non-resident related, what are those? 80D related. There's a restriction. What we said, 80D related, SSE is non-resident super senior citizen. Then limit how much, sir? Then limit is like 25,000. Limit is like 25,000. This we wrote. Then we discussed what 80 DD, 80 U, 80 DDV. These are like what? Disabled related. This is about specified disease. Not available to non-resident. Not available to non-resident. Then QQB, 80 RRB. These are also not available to non-resident. Then 80 TTB. This is also not available to non-resident. Now there is under another differentiation like old regime versus new regime. Under new regime only 3 sections are available, sir. CCD subsection 2, CCH subsection 2, JJA. See, for individuals and HUFs opt a default regime. CCD subsection 2, CCH subsection 2, JJA. So only these 3 are eligible. Only these chapter 6A deductions can be claimed. Hmm. 80 intercorporate dividend. No. Let me check one second. Yes, it would be, but under like different cases, like if you see 115 BA they opt, then not allowed. If they opt for like 115 BAA or 115 BAB, then again ETM will be allowed. So this one like anyhow companies related we'll discuss here now. So So there again we'll be thinking, we'll be discussing there again. So just I'll read out 80IA and IAC also, sir. Deduction in respect of PGBP from an undertaking or enterprise engaged in infrastructure development. So, sir, 80IA related, or like the total 80I series is about high capital investment related projects only. For them, the whole 80I series is there. So 80IA related, what is the point here? Where the deduction available is like 100% of profit and gains out of, for 10 years out of consecutive 20 assessment years, if the projects are related to roads, bridges, rails, highways, projects, water supply projects. If they are like any other infrastructure projects, 100% then also, but out of 15 years only, 10 years they could choose. With respect to roads, bridges, rails, highway projects, now out of 20 years they could choose 10 years. And then this is to encourage startups. 80 IAC, eligible PGBP income derived. PGBP income derived by an eligible startup. How much is the quantum of deduction, sir? 100% of their profits for the first 3 consecutive years. So what the company should be doing? It has been incorporated in between 1st April 2016 to 31st March 2025. In that period, their turnover should be within 100 crores and holds a certificate of eligible business. Eligible business, now first the project report has to be submitted to the Ministry of Commerce. Then they'll go through it and they'll figure it out whether it is an eligible business or not. If it is an eligible kind of or eligible technology which the government wants to promote, then they'll be eligible for getting the deduction. It's not like straight away we can claim deduction. First, the ministry has to approve it, that it is an eligible business. So now, why we are not solving separately problems from deductions means there won't be a separate standard question from deductions. Deductions, you need to remember, they'll be interlinked with some other chapters only. So the questions will be there straight away from the PGBP chapter onwards only. So that's why we didn't discuss for the deductions or for the basics. For the other chapters, we'll be discussing deductions, questions also anyhow. So okay, you can take another 5 minutes of break. Then we'll go with PGBP, sir. So we'll go till 8 o'clock, sir, today alone. So you can take another 5 or 10 minutes. 6:40 we'll start again. Sir, if at all you did tax audits in your articleship, then you feel PGBP chapter as like easy only. But many students may not got involved in the tax audit chapter, in the tax audits. So they feel usually like the PGBP chapter as like little tough and complicated. Okay, so that way. But PGBP is one of the core chapter, not just for the purpose of exam. Even the simple reason, sir, business is the one which pays more tax. So all the business related conditions will be there under the PGBP head. So let's say you cleared CMA, you will be hired by a business. Again, business related conditions will only be there. Let's say you are a professional, business clients will only come mostly. So there also you need PGBP. So in any way, okay, you need PGBP to be learned. So that's why, so there's no other option, we need to learn. So because like usually like I don't know how you guys like whether in inter you studied this. In AP and Telangana, most number of students like they leave PGBP at inter level. You also left PGBP at inter level. They'll take it as like choice there. Okay, even I also like in inter level and all I'll once like I used to read like CA inter level there that time they used to give like Paduka book. So there's like Paduka publications is there like here. Institute name is like it will be there in Sitaraman and Co only. Sitaraman and Co is like a bookshop kind of that. There also Paduka and in Mylapore like that flyover before it would be there. I stayed in Mylapore like when I studied like CA final and all I was there in here only. Okay. So there used to be some publication like it would be like some 1100 1200 pages that time. Okay, so that time like even GST also not came when I'm studying like inter service tax and what only that pages is like the whole like DT and IDT like for 100 marks only. So when income tax when we start studying like PGBP chapter I used to open like 28 I'll read section 28 the charging section which would be there I'll read, then I'll go till depreciation. Once by completing depreciation itself I felt like I have studied so much in the chapter and then afterwards like we can't study there. Okay, so only depreciation alone we'll learn in the inter level. So okay, but then final level there is another author like Vinod Gupta sir. Okay, VG learning, you'll find it even in YouTube also. He's not taking classes now. Okay, I mean I taken classes here only, but for studying preparation again I bought his books. So here like that time Saumen sir, RSN, MT Educare, there used to be one institute here. Okay, for CA coaching on in Nungambakam it used to be there. Okay, there will be like around 750 plus students, face-to-face students will be there like. So okay, we'll be there at last like 750, 800 students will be there. Okay. So his classes. But then for material and all I found Vinod Gupta books. He has given for PGBP alone 300 pages book. Only for PGBP only. Okay, so first I thought of writing both groups, CFNL. Okay, I started with DT. This PGBP 300 pages book only I read for 10 days. Then I decided like I can't write both groups, I'll write only single group. But for that 10 time when I read that book separately PGBP, then I got the PGBP. In main exam also, PGBP is the only chapter which I did perfectly. All the other questions I couldn't do properly. So okay, this is the only, because that's a tough paper. Only this question I could solve. The other questions and all I'll be checking like 1 mark from this part, like 2 marks from this part, like that only. Okay. So the only thing is like to understand PGBP, you should have proper accounting knowledge. Once you have proper accounting knowledge, then PGBP would be easy. Okay. So far as like in a PGBP chapter, the questions will be asked in 2 models. One is like receipts and payments model. And a question, he'll give various receipts and various payments and he'll ask you to calculate the taxable profit. Okay, receipts now. Sir, all the receipts need not to be your incomes. There may be loan money. That is also a receipt also. So from those receipts, you need to find out what are the business incomes. So receipts means you could have interest received, dividend received, okay, loan amount received. So for all the receipts, first you will find out what are incomes. And then from those incomes, you will be finding out which are related to business. You will categorize them. Then payments also will give. Payments now again, it may be for an expense, it may be loan repayments. So the payments also, some payments may be expenses, may not be expenses also. So first out of all those payments, you will categorize which are like expenses kind of. Those expenses again you will find out whether they are like business related or not. You will subtract from them. So, okay, so simple receipts and payments model, na, very simple model. From all those bulk data, from the receipts, you will categorize which are related to business. Those receipts only you will find out, you will take, I mean income nature and related to business. Then from the payments also, you will find out which are related to, which are like first expense nature and related to business. That you will be subtracting, you will get the PGBP income. That is one model of asking question. Okay, in inter level they'll ask, final level they are not asking receipts and payments model. The second model is like, which you do actually in the tax audit. Okay, what is the second model? They'll give us the P&L. Already they might have did the accounting P&L and there is an accounting profit. From accounting profit we'll arrive the tax profit. From accounting profit we'll be arriving the tax profit. So it's more or less like a reconciliation statement. You'll start with costing profit and ends with accounting profit. Inter-level reconciliation statement. You will start with cash book balance and end with the bank book balance, BRS kind of. So it also like, you will start with the accounting profit and needs to end with the tax profit. Okay, so what are the major differences? Sir, in income tax we have 5 heads: salaries, house property, PGBP, capital gains, IFOS. Do we have such kind of heads in accounts? In accounting, do we have such kind of heads and all? I have interest received. Here it is taxable under IFOS. But whereas in my accounting P&L, interest received will also get credited to P&L. Dividend received, credited to P&L. I have any rent received, credited to P&L. Sales, credited to P&L. So now out of all these credits to P&L, few are not related to PGBP head. But the accounting profit already included them. Okay, so let me show you, sir. So let me take a P&L here. So in the P&L, so okay, there is sales, there is like interest received, there is rent received, there is dividend received, interest received, rent received, dividend received. There may be agriculture income also. So now all these are what credited to P&L. So now under income tax, if you see, sales now related to business only. Interest received now it is taxable under which head, sir? IFOS. Rent, house property, assuming house property only it is. Dividend received again IFOS. Agriculture income not even taxable, exempted. Now if you calculate net profit here in the accounting P&L, this net profit not just includes this sales. This also includes, this net profit even includes this interest received, rent received, dividend received, and even this agriculture income. Now for tax profit you need to calculate. Since these 4 already include in this net profit, what you will do? You will subtract them. Okay, you will be subtracting. So any incomes which were credited to P&L, understand my point, sir. Any incomes which were credited to P&L but not related to PGBP head. Any incomes which were credited to P&L but not related to PGBP head. Then what we will do? We will be subtracting from the net profit which is there under the P&L. Okay. Second one, incomes credited to P&L but they were exempted. They are exempted like agriculture income. That also what you will do? Will be subtracting from the net profit here. Okay. Now in note he'll give an income, sir, stating like some business related income only he'll give, and he'll say like they forgot to credit to P&L. It's a business income only related to P&L only, or related to business only, but they didn't credit it in the P&L. Sir, we want what? The actual business related profit. So since it is not credited to P&L, it was not included in the accounting profit. So what we have to do now? We'll be adding it to the accounting profit. So credit side done already. So the P&L, credit side, debit side. So based on that, we'll do the PGBP chapter. Credit side, whatever the incomes are there, we'll go through them. Related to PGBP, no problem for us. Not related to PGBP, or they are exempted. Two reasons. Okay, those incomes, since they also became part of net profit, we want only business related profit, so we'll be excluding them. So we'll be subtracting. If any income not credited to P&L, just given in the notes to the P&L and all, or any information, additional information only they given, then that incomes you will be adding to the profit. This is the income side. Now expense side. For all these incomes related, there may be relevant expenses. Like let's say for house property related, municipal taxes might have been paid. Municipal taxes paid. Then agriculture related agri expenses. Then to earn this dividend, some interest might have been incurred. Now all these expenses, sir, are they related to PGBP? Okay, when the corresponding income is not considered, then the relevant expenses also shall not be considered. Okay, now all these expenses were included in the net profit. Now we need to reverse them. So first of all, expense, initially we might have subtracted them. Debit side, we might have reduced them. So now to reverse them, what we'll be doing? We'll be adding back. We need to add back all those expenses in the P&L which were not related to the PGBP. Okay, so these were the expenses which were not related to PGBP. Then there may be other expenses also. So the problem here is like mostly with related to expenses only. With related to expenses, there are certain conditions which were given under the PGBP chapter. Only when you satisfy certain conditions, expense can be claimed as deduction. Okay, something like you need to deduct TDS, you need to make the payment through other than cash modes, you need to make the payments at a fair market value. So certain kind of conditions are there. So for all those expenses, you will check those conditions. Whether conditions are satisfied, then fine. Because already debited to P&L, what is the meaning? They already reduced that expense. You will check those conditions has been met or not. If the conditions are satisfied, they already debited to P&L. We also wanted to debit only. Okay, so no problem, nothing to be done. There are certain expenses for which conditions are not satisfied. If conditions are not satisfied, then they cannot be taken as expense. But already what has happened? They already taken it as an expense. So again, what you should do? You need to reverse them. Nothing but you'll be adding back. Understand, sir? So credit side, you'll find out certain incomes which were not related to PGBP. You'll be subtracting them. Debit side, you'll find out expenses which were not related to PGBP. Add them. Debit side, you will find expenses which were not satisfying the conditions under PGBP. From section 30 to 37 and 40 series, all those conditions will be reading now. If those conditions are not satisfied, then also what we will do? We'll be adding back second one, third one. In notes also, he'll give certain expenses. Even in additional information also, he'll give certain expenses which were not debited to P&L and not related to PGBP also. Sorry, understand my point. P&L, they didn't debit it. Okay. And we'll be checking whether it is related to business or not. Not even related to business. If it is not related to business and not even debited to P&L, no problem. Okay. Then expense debited to P&L. Sorry, expense not debited to P&L, but related to business. Example, salary paid to accountant, related to business. But they forgot to debit in the P&L. So it is an expense which has to be taken. But they didn't take it actually. So what you should do? Now you'll again subtract that one. Okay, so it's basically about what to do plus or minus. Why the PGBP question majority students will fill it as tough now. First, the provisions will go for 50 pages. Okay, so you'll get tired by reading those pages only first. Then you need to go and solve those questions. Okay, so problem is like you need not to read all those provisions to solve a basic level of questions and all. Okay, the basic level of question, read a few points only. First, you should understand the basic thing what you should do in the PGBP. Our basic agenda is what? We will be taking only those incomes and only those expenses which were relevant to PGBP. First one. Second one, those expenses which we are taking also shall satisfy the conditions which were given. Those expenses only we will be availing. Okay, so those conditions only whole chapter. Okay. Look at here, sir. In the second page itself, we'll be having an example. So then we'll get much more clarity also. Pattern of asking a question from PGBP. There will be a P&L model question and there will be a receipts and payment model also. In P&L models, okay, in receipts and payment, there will not be any accounting profit given. Okay, so receipts and payments model, they'll not give any profit for us. They'll just give the statement of their receipts, statement of their payments. Just give the receipts and payments. So from those receipts, you yourself have to identify which were related to PGBP. Pick them. And from payments also, you'll pick those expenses which were relevant to PGBP and which satisfies the conditions given here. Those expenses only you will take. From the incomes, you will subtract expenses, you will get the profit. See, from the total receipts, identify incomes and take only those incomes chargeable to tax under the head PGBP. Okay, so for that, sir, to find out that, we have two sections, 28 and section 41. There are two sections here. Section 28 and section 41 will help us in deciding the credit side or the incomes related. Which incomes are taxable under the head PGBP? Those incomes we can identify by reading 28 and 21 or 41. So those profits will identify. Then expenses. Expenses, okay, from all the payments you will find out expenses and other payments and check whether they are allowed under 30 to 37. From section 30 to 37, you will go through them whether that particular expense is covered there or not. It should be covered there, first one. And it shouldn't be disallowed under 40, 40A and 43B. Sir, to qualify as an expense here, first it should be covered under section 30 to 37. 30, 31, 32, 33, 34, 35, 36, 37. Any of these sections should cover that particular payment. First one. Not just mere covering is enough. It should have covered there and it shouldn't be disqualified separately under 40, 40A and 43B. Both these are satisfied. Then such expense can be reduced. You will get the profit and gains from business or profession. So receipts and payments model na very simple. So they'll give you a list of receipts, list of payments. From the list of receipts, identify the incomes which were related to PGBP. How can you identify? By reading 28 and section 41, you could identify those incomes. Then payment side. Lot of payments are there. First, by applying your basic accounting knowledge, first you will find out which were relevant to business. Those expenses you will check whether those are covered under section 30 to 37. Okay, if it is covered there, so then you can certify yourself like it is a business related expenditure. Then again additionally you should check 40, 40A, 43B, those sections. Those sections will tell you certain extra conditions like this TDS has been deducted or not, payment has been made in cash or other modes, those conditions. If all those are satisfied, then you will subtract, you will get the PGBP income. So this is the receipts and payments model. Now P&L model. Mostly we'll see which kind of model questions are P&L model questions only. Even in articleship also you might have come across the P&L model things only. Question gives us incomes credited to P&L. And even expenses debited to P&L as per books of accounts, and even they'll give accounting profit also. From there we should calculate what? Tax profit. Okay. So what is the P&L? It goes more like a reconciliation statement. So we'll take profit as per accounting books of accounts and we'll do plus or minus the adjustments. Then ultimately you will get the profit and gains from business or profession. So how do we adjust? First, income side we are taking, sir. Then in the next page we'll go for expenses side. That particular income is credited to P&L. Income credited to P&L. Let's say dividend credited to P&L. But dividend, is it taxable under PGBP head or a separate head? IFOS head. So credited to P&L and it is taxable under the PGBP head only. For example, sales credited to P&L, taxable under the head PGBP. So we need not to do anything because sales are related to PGBP. Because of sales there is profit, nothing to be done. But there is a credit which is either exempted or not taxable under the head PGBP. What are the examples? Agriculture income exempted, or dividend, interest. So these are either exempted or not taxable under the head PGBP. What we'll do, sir? Reduce them from the accounting profit. We'll reduce them from the accounting profit. Why we are reducing, sir? Because all these are already included in the accounting profit. Because of them the profit already increased. To make it normal we need to reduce them. Then not credited to P&L. Not credited to P&L, they just given it as like a note or something. Not credited to P&L and it is taxable under that PGBP. then what you will do, add the amount to accounting profit. Either exempted or not taxable under PGBP. Sir, if it is exempted or not taxable, we shall not consider. They are also not considered in the P&L. So simply what, you'll leave that, no action. Okay. Same way, sir, 4 kind of adjustments even for expenses. Sir, income side you have clarity, right? Sir, income side it would be very easy, sir. Okay. Mostly our job is like, so whenever I start a PGBP problem, first I'll go to the credit side. Then there I'll identify which are not related to PGBP, IFRS related or dividend, all these things, capital gains related, all this. So all these what we'll do, we'll be subtracting it from the accounting profit. Then we'll come to expense side. If the expenses are debited to P&L account, already debited to P&L, I mean debit side they are there. We'll check whether they are allowed under 32, 37 and not disallowed under 40, 40A, 43B. So 2 conditions has to be satisfied, sir. First, it should have been covered under section 32, 37 and not disqualified by 40, 40A, 43B. Okay. If this is done, then fine. I mean, that's a eligible expense only. You can take it as a deduction. So deduction, once they debited to P&L means what? Already they reduce that expense. So, okay. So we also saying what? When 32, 37 conditions are satisfied and 40, 40A, 43B disqualification didn't attracted, and we are also saying like it is an eligible expense only. It can be reduced. They already reduced now, so we need not to do anything. Let's say not covered under 32, 37. That means what? It's a disqualified expense or a disallowed expense. Second option, satisfied 32, 37, but the second part 40, 40A, 43B is not satisfied. Then that expense is becoming disqualified. I mean, it's a disallowed expense, but already they subtracted in the P&L. Debiting to P&L, they already subtracted. So now what we need to do, we need to reverse. That's why we'll be adding back. We'll be add back such amount to the accounting profit. Okay. Then items which are not debited to P&L. Okay. I mean, in the information, in the extra note points, they are given that point. Okay. Then again, you'll check allowed or not allowed. Let's say it is allowed, but not debited to P&L. Not debited now, they didn't reduce as of now, but it is allowed now. So what you need to do, again you'll reduce it from the accounting profit. Again, not allowed, and it was not even debited to P&L. So we are saying like it can't be taken as an expense. They also didn't debit it to P&L. So no problem, will not take any action. Understand, sir? This is the, sir, we are not discussing any PGBP here. We're just discussing the basic accounting and the tax related rules to solve a problem here. Okay. So for example, sir, it's a P&L model question. P&L statement for financial year 24-25 as on 31st March 2025. Sales related to what, sir? Sales related to business only, PGBP. Closing stock related to business, PGBP only. Interest, IFRS. Dividend received, IFRS. Agriculture income, exempt. Rent from house property at. Profit on sale of land, capital gains at. Okay, so that means this 5 lakhs, 4 lakhs, 10 lakhs, 3 lakhs, 5 lakhs are also included in the accounting profit. So what we should do? Subtract all these things. Okay, so from this net profit 40 lakhs, we'll subtract all these things. Now we'll come to debit side. So okay, sir, we didn't write as of now 32, 37. But still based on our basic knowledge as of now which we are having, opening stock related to what? Business. Purchases related to business. Conversion cost now, manufacturing expenses, business. Salary, PGBP. Advertisement, PGBP. Depreciation, PGBP. Municipal tax related to house property related, not related to business. Interest paid to earning dividend, so again not related to PGBP. Income tax, sir, first of all, why we are calculating here profit here? For calculating income tax. For calculating income tax, why will be already allowing the income tax as an expense? It's a basic question, right? So we want profit, then we'll be calculating the tax. So first itself provision is not allowed for income tax. So this is also not given. So okay. So these 2 expenses are not even related to PGBP. That's why. But already they did what? They debited to P&L. Debited to P&L now, they already reduced it from the incomes. That's why we need to reverse. What we'll do? We'll add back these 2. Okay. Provision for income tax also, I already said the reason. Simple reason what? We are calculating this profit for tax purpose. So that's why tax expense itself can't be allowed. So we'll be adding back this one also. Then coming to this, there may be some additional information. There's a bad debt recovered, 1 lakh, not credited to P&L but previously taken as deduction. So you got bad debts recovered now. So once you got bad debts recovered now, it's an income to you. If you in past you thought like that amount itself will not be recovered and you written off in your books also. I mean, you already claimed it as an expense. But now you are recovering some amount from that as bad debt, from that bad debts. So now it's an extra new income for you, so which is not credited to the P&L. It's an income not credited to the P&L. So what you will do? Add it to the accounting profit. So this bad debts recovered 1 lakh, you will add it to accounting profit. Then depreciation. We all know this, sir, fundamentally, even though you don't have listened to the PGBP as of now, but you have this basic knowledge. Depreciation as per accounting and depreciation as per income tax would be different. So since here we are calculating for tax purpose, we should only take tax depreciation, not the accounting depreciation. How much is the accounting depreciation, sir? 5 lakhs. How much is the IT depreciation? 7 lakhs. So what you will do? Accounting depreciation, you reverse, add back. And now again take income tax depreciation. So depreciation 5 lakhs you'll add back and 7 lakhs you'll be subtracting. Then customs duty of earlier year paid in current year. So what is the problem, sir? Here means customs duty, okay, it's an expense. It was related to what? Past years. For past year, now why it is relevant for current year? Now the problem is there is a section called 43B which says like this kind of taxes and statutory dues, they should have been paid by due date of filing written off income. If they are not paid, then they can't be taken as an expense in the year which it is related to. So in the past year, since it is not paid, this 50,000 is not allowed as deduction in that year. But now it is paid now. So now we can claim it as deduction. The problem is it debited to P&L? Current year P&L, it's not debited. But still we were saying like what? It can be taken as an expense. So what you will do? You'll be again subtracting this. Commission paid to agent, 50,000. Not included in P&L but fully paid in cash. I'll repeat, Renuka. It's okay, I'll repeat. Commission paid to agent, how much? 50,000. Commission paid to agent is how much? 50,000. Okay, not debited to P&L. Commission related to business only. But the problem is what? They paid in cash. Once they paid in cash, now they are not satisfying the 40A conditions. So I mean, certain conditions are not satisfied, so it can't be taken as a deduction. Not debited to P&L. Even conditions also not satisfied. So what we'll do, we'll simply leave that one. No action. Okay. So once again, I'm explaining, sir, for the expenses side. Sir, here my intention is like, I'm not thinking like you'll understand everything. My intention is just basically your understanding what we are adding and what we are subtracting only. Okay. So because this bad debt point, depreciation point, customs duty, commission, these involve other sections also. So I just trying to explain the outlay. Okay. So once again, sir, for the students who didn't understand, I'm explaining once again. First, I'll tell the relevant provisions. Bad debts. Bad debt, once it is written off and subsequently recovered, it's an income for us in the year of realization of that bad debt. So since we recovered now, this is an income. Then depreciation as per Income Tax Act and depreciation as per accounting will be different. Why they would be different now? Because of methods of depreciation. The method of depreciation which they follow in accounting and which they follow in income tax might be different. In accounting, there are no standard rates to be taken for depreciation, but whereas under income tax, there are certain standard rates. There is no additional depreciation concept in accounting itself. In no accounting standard as suggested as additional depreciation. But in income tax, there is something like additional depreciation. So because of these things, there may be a change in depreciation for accounting and income tax. Then customs duty point. Customs duties, okay, the point here is like it is relevant to 43B section. Okay, general understanding I'm giving, sir. It talks about some 7 or 8 payments. Okay, so what 43B intention is like, those particular expenses will be given as deduction only on cash basis, not on accrual basis. Okay, what is cash basis and what is accrual basis? Cash basis na actual payment should have been made. Accrual means even though not paid, once you pass a payable entry or you recognize it as a liability, it's fine. Okay, so 43B says like customs duty will be allowed as deduction only when it is actually paid. Since it is not paid previously, that year it can't be taken as expense. But current year it was paid now. So that's why in the current year it can be taken as deduction. Then commission paid to agent. How much, sir? 50,000. Commission paid to agent is a business related only. But the problem is it is paid in cash. So 40A subsection 3 says like any amount in excess of 10,000 paid in cash are not allowed as deductions. Okay, this is the background, sir. Now if you see again. Income side, I think everybody understood that one. From the income side, which were not related to PGBP or exempted, will not be considering them. That's why from accounting profit, we need to exclude them. That's why we are adding back. We'll be subtracting them. Okay, from 40 lakhs, all this will be subtracted. Now debit side. To these corresponding incomes, which are reversed, if any corresponding expenses are there, those expenses also we need to exclude. Sir, income side we need to exclude means since already they were added, to reverse them we are subtracting. Expense side, if you need to exclude them, what you will do? Since already they are subtracted, to reverse them you will be adding back. So municipal tax, house property related added back. Interest paid for earning dividend also added back. But the problem is here with respect to depreciation. What is the depreciation, sir? We are calculating profit here for the purpose of taxation. So we should take only the income tax depreciation. But to the P&L, which depreciation is charged? Accounting depreciation. So to reverse this, whatever is the accounting depreciation will be reversing by adding back. And then will additionally claim depreciation expense of 7 lakhs will be subtracting this. Sir, first, depreciation is a business related expense only. So depreciation can be claimed. But which depreciation? Tax, income tax provisions related as per section 32, whatever depreciation is calculated, that only you can claim. So this 5 lakhs which is debited to P&L is not related to income tax. That's why we reverse this by adding back. Which is related to income tax 7 lakhs is there na, this will be subtracting. Renuka, are you able to understand? Okay, then customs duty. So customs duty, sir, since it is a past year, sir, 2 set of P&Ls will be there. Tax related, accounting related. So for in the current year P&L, there is no customs duty expense. But the point is what? It was a last year expense, but as per income tax, it will be allowed only in the current year. That means customs duty you didn't see in the debit side of P&L, but still it is allowed. So what do you need to do? Additionally, you need to subtract this customs duty. Then commission paid to agent, 50,000, not debited to P&L, and it even can't be taken as a deduction also. So simply what you will do? You will just ignore that one. Okay. So now you see the solution, sir. What is the solution? First we took net profit as per P&L account. What is the net profit as per P&L account, sir? 40 lakhs. Then depreciation as per accounting, what we'll do? Because we need to take only the depreciation as per income tax. That's why depreciation as per accounting we have added back. And then municipal tax interest paid on earning dividend are not related to PGBP. That's why we add back municipal tax, interest for earning dividend. And then next one, provision for income tax. Why provision for income tax? First of all, we are calculating only for the purpose of tax. That's why. And even 40A also says that provision for income tax has to be disallowed. That's why we have added this. Then bad debts recovered is an income. It's an income. Since it is not credited to P&L, we need to recognize it as an income now. That's why what we are doing, sir, we are adding it. Sir, adding it to consider it as income. So total the additions to be made is like 12 lakhs and then less all these credit side incomes which were not related to PGBP, interest, dividend received, agree income, rent from house property, profit on sale of land, all these will be subtracting. Interest 5 lakhs, dividend 4 lakhs, agree income 10 lakhs, rent from house property 3 lakhs, profit on sale of land. And depreciation as per IT Act. Why sir? Because as per accounting you reverse, as per income tax you are subtracting 7 lakhs. And customs duty which was not there in P&L but allowed as per income tax rules, that 50,000 also if you subtract. So total additions to be made is 12 lakhs and subtractions to be made is 34 lakh 50. Will get the PGBP amount as like how much? 17 lakh 50,000. Sir, the questions which are going to be asked in exam are also the same model questions with a much more extended version. The basic formula remains same. Okay, and then this adjustment. It was already there in an exam question, mocked MQP also. He'll give undervaluation of stock, overvaluation of stock. Okay, this you should have learnt in the interlevel itself. Interlevel only, in accounting only, somewhere there will be problem like if there is undervaluation of stock, what is the impact on profit? If there is overvaluation of stock, what is the impact on profit? But instead of asking it in the accounts, they'll link it with the PGBP question and ask they'll give opening stock, closing stock and simply say like opening stock overvalued by 10%, closing stock undervalued by 10%. So then what to do? See, one opening stock undervalued. Let me take an example also. P&L, this side debit, this side credit. Okay. Opening stock, let's say 10 lakhs. Here the profit is 40 lakhs. Here let me take the closing stock also. All others are there. So we are just, since we are relevant only on this, I'm taking these three only. Opening stock 10, closing stock 15 lakhs, profit is 40 lakhs. This is the debit side and credit side. To get profit, debit side items, okay, then first one. Opening stock, what happens are undervalued. Okay, opening stock undervalued. I mean, this is actually not 10 lakhs. This might be some 12 lakhs or something, but you shown is how much? 10 lakhs only. That means you are reduced less. If you reduce, so debit side na, the items are of like subtraction nature. Here like addition kind of. So once you are reduced less, so your profit would be obviously what? More. Okay, profit has been increased. So to counter that, what do you need to do? Sir, our always will be starting with the profit only. You could adjust something. Because of undervaluation of opening stock, your profit got increased. To make it normal, what to do? Profit has to be reduced. That means the difference you will be subtracting. The difference you will be subtracting. Undervalued, profit increase. So difference amount reduced from the net profit. Then opening stock overvalued. Okay, so instead of 10 lakhs, you already claimed it. I mean, this 10 lakhs itself is more. Actual value is 8 lakhs only. But you claimed as, you debited how much? 10 lakhs. That means you claimed more expense. When you claim more expense, profit come down. So since the profit come down, to make it normal, what you need to do? You need to add the difference. Okay. So overvalued, the effect on profit is profit decreases. So what you need to do? Difference amount add back to net profit. Then closing stock. Closing stock undervalued. When closing stock, credit side, when there is undervalued, again, profit will what, sir? Profit will decrease, sir, when you are in closing stock na income side. Where income is less, na profit will also be less. So opening stock na debit side, expense kind of. Closing stock na credit side, income kind of. Closing stock means income side. So when income is less, profit will also be less, right? So closing stock undervalued. Profit will reduce. To make it normal, you need to add. So the difference of closing stock you need to add. Closing stock overvalued. I mean, you are taken more income. So profit also might have been increased. So to make it normal, what you should do? Subtract. Okay, the difference amount you need to subtract. Okay. So but without having a practice, straight away they'll ask it in exam. this opening stock, closing stock adjustment. So what happens, we don't know. Usually our brain works properly only, but in exam hall only. Okay. The simple things which we might have been so, which you might have did practiced also, sometimes you will do mistakes. If without practice, now obviously you'll do more number of mistakes. That's why, sir. Sir, everybody able to understand, sir? Sir, here the logic should be understand, sir, because this is not something like a tax provision which you could by heart and remember. So you should visualize this thing. So when opening stock overvalued, what is the impact on profit? So how it works? So for that, obviously you should know accounting. Okay. So look at this example, sir. Second example. So now you need to calculate this and you need to tell. So what to do that opening stock and closing stock differences. Compute income under that PGBP for A Limited for previous year 24-25 based on the following. The P&L statement given is like buy sales, buy closing stock, rent from house property, profit on sale of shares, agriculture income. Sir, which are not related to PGBP? House property, not related to PGBP, we need to subtract this. Profit on sale of shares, capital gains, we will be subtracting. Agriculture income, exempted. So these three we need to subtract. Expenses side also, if you see opening stock, purchases, salary, fine, provision for income tax, we need to do what? Add back. Why? Because income tax is not an allowed expense. Expenses related to agriculture, add back, sir. Why? Because agriculture income is not allowed now. That's why related expense also not allowed. So what you will do? You'll add back. Then depreciation. Depreciation, sir. What we should do? Depreciation. Accounting depreciation will add back. Income tax depreciation will be allowing. So accounting depreciation I will be adding back, whereas income tax depreciation I will again subtract. Okay. So majority already done. Now bad debts written off previously recovered during the previous year 1 lakh. So what you should do? Again we will treat it as an income. Net profit balancing year, okay, 30 lakhs we have taken. What is the other point they given, sir? Opening stock and closing stock are underreported in books by 10%. So the closing stock 50 lakhs is just 90% only, and the opening stock 30 lakhs is also 90% only. So there's a 10% deficit there. Okay, so how much it would be? Sir, you cannot do straight away 50 lakhs into 10%. Because what? This 50 lakhs itself is the 90%. Okay, so undervalued by 10%. Now the meaning is what? So the closing stock 50 lakhs value which is given is 90%. It's not 100%. So you can't just take 10% into 50 lakhs. So how do we calculate, sir? Opening stock adjustment. When the opening stock is reduced, then the impact profit will what? Increase. So given opening stock 30 lakhs equals to 90%. So 100% is how much? 30 lakh, 33 lakh, 33,333 is the 100%. When 90% equals to 30 lakhs. So simple, sir. 30 divided by 0.9 you do. 30 lakhs divided by 0.9. How much? 33 lakh, 33,333 is the 100%. So here how much it should be, sir? 33 lakh, 33,333. But how much is debited there? 30 lakhs only. So how much expense you didn't charge? 3,33,333. Because of this your profit increased by 3,33,333. So to make it normal, you should reduce the 3,33,333. So actual opening stock equals to 30,33. So difference is 3 lakh. So adjustment is what? Reduce it from the accounting profit. Then closing stock. How much is closing stock, sir? 50 lakhs. Where 90, okay, when closing stock is reduced, profit will also reduced. When closing stock decreases, credit side any amount decreases, profit will also decrease. So profit also decrease. So given closing stock 50 lakhs equals to 90%, then 100% equals to 50 lakh 55,555. So the difference is how much? 5 lakh 55,555. Since profit got reduced, to make it normal, what we should do? Add to profit. Yes, okay. Pratiksha Pridarshini said a good example. Opening stock and profit are like enemies. Okay, when one rises, the other falls. Whereas closing stock and profit are like friends. So they together rise, they together fall. Thank you. Thanks for sharing, Pratiksha. So now we understood the question, sir. What we need to add, like rent, profit on sale of shares, agriculture income, we need to reduce. Depreciation, provision for income tax, expenses on agriculture, we need to add. And this depreciation as per IT Act also we should subtract. And this bad debts written off and recovered during the year, like 1 lakh, we need to add. Opening stock and closing stock under reported also we already got, like which has to be 3,33,333 we should subtract. And 5,55,555 need to add. So 30 lakhs. You just take the additions. 5 lakhs, provision for income tax, expenses related to agriculture, depreciation. Bad debts recovered 1 lakh. So total it is 24 lakh 55,555. Then subtractions to be made. Opening stock adjustment, rent from house property, profit on sale of shares. And agriculture income 8 lakhs, depreciation. So it's like 4 lakhs. Okay, mistakenly it was 15, 23, 27. Okay, sir. Sir, in the question itself, correct it, sir. Depreciation here it was wrongly printed as like 1 lakh. It is like 4 lakhs. Okay. So the total profit and gains from business or profession will be 24 lakh 22,222. Okay. So till now, sir, whatever we have discussed is not from Income Tax Act. It's just for us to understand the questions and to solve the questions, sir. Sir, understand, majority times you do wrong PGBP questions not because of you're not reading PGBP provisions. You read PGBP provisions. The problem is like while applying them, it's okay, you'll be basically the problem is with these additions and subtractions only. Okay, so hardly, sir, you open any PGBP problem, there will be 5 or 6 standard repetitive adjustments only. Cash payment, TDS non-deduction, related person related payments, 3 things. Okay, those only will get repeated. Okay, but still, okay, since you don't know these basic points and all, you will be doing the mistakes. So opening stock closing adjustment he'll give, or bad debts related point he'll give. These are like most frequent points only. Once we open questions also we'll see. So now 28, sir, we are going into the charging section, section 28. What is the purpose of charging section? Sir, here under income tax there are 5 heads. Once there are 5 heads now, under which head which income is taxable, how would you know, or how we know? Okay, we already studied in inter-level, sir, don't tell all that. Okay, even though you studied at inter-level, how you learned that one? Because for every chapter there is a charging section. For every head there is a charging section. The salaries head charging section will say like which incomes are chargeable to tax under salaries. PGBP charging section says like which incomes are chargeable to tax under that PGBP. So by reading the charging section, we will identify which incomes are taxable under that particular head. So section 28 gives us the clarity about which incomes are taxable under that PGBP. Okay. So first one, profit and gains arising from business or profession carried on by the SSC during the previous year. So by doing any business or profession, you earn any profit and gains, those are chargeable to tax under that which head, sir? PGBP. Sir, I am doing business only. I have surplus cash 30 lakhs. 30 lakhs I deposited in bank. Bank gave me 1 lakh as interest. Now that 1 lakh is not my business income. Even though the receipts are from business only, but still that wouldn't be treated as my business income. So that interest or dividend income, winnings, as a part of my business only, I might have did all those. But still, if the income is of dividend nature, interest nature, winnings nature, those are not chargeable to tax under the head PGBP. Understanding, sir? You have surplus cash. You deposited in the business. You deposited in the bank account. You may be withdrawing whenever you have necessity in the business. But still you earned interest. Since you earned interest, that is not because of your business activity. Business activity na, by way of doing your regular buying and selling, if you earn any income, that is only active. Passive nature and active nature will be there. Na? So because it's not, interest is a passive income here. Not because of your regular business operation. So that is taxable under which head? IFRS. Your business itself is investing in different companies. But still dividend income is taxable under which head? IFRS head. Okay, winnings, they are taxable under IFRS. Income from letting out of residential house property. Sir, commercial property na, then taxable under that PGBP only. If there is a hotel, guest house, they are renting rooms. Their business itself is renting rooms. Then the rental income can't be taxable under the house property income. Why, sir? Because house property had specifically said like, if it is not a commercial property, their business itself is renting out those premises and all, then that is taxable, that is not taxable under the house property. So that's why it is taxable under which head? PGBP head. Okay. So any income which you earn by doing or carrying out your business or profession is chargeable to tax under the head PGBP. But you should remember, even because of business only, if you earn any dividend income, interest income, winnings, or any rent from residential house property, those are not taxable under that PGBP. Then partnership firm. There's a partnership firm which pays interest, salary, bonus or commission to partner. Firm paying interest, salary, bonus or commission to partner. From firm, partner receives any of these payments, interest, salary, bonus, commission. Even though they are of different nature, but to partner always they will be treated as what? PGBP income only. So, okay, sir. Usually income is taxable under the IFOS set. But one exception is like the interest received by a partner from a partnership firm is taxable under that PGBP only. Okay. And if the interest is earned by banks, then it is taxable under that PGBP only. So, sir, why? For us, interest, it's not a regular income, it's a passive income. Whereas for bank, that itself is the active income for them. So for them, it is taxable under that PGBP only. For the normal people and all, interest is taxable under that IFOS. Okay. So for partners, whatever the amounts they received from partnership firm, all of them are chargeable to tax under the head PGBP only. Okay. Business income to partner. Then where the firm is giving any profit to partner, share of profit to partner, here to eliminate double taxation. So what is double taxation? Firm did a business, firm got profit, firm already paid tax, and the same profit again distributing to partners. Again partner has to pay tax, right, in individual capacity. To eliminate that, in the partner hands it has been exempted. For share of profit from firm to partner is exempted, sir. Write down a point, sir. If the firm is registered outside India, then taxable. If the firm registered outside India, then it is taxable. If the firm registered outside India, then it is taxable. See, we'll understand the treatments are here also. An example. Let's say interest and salary to partner is 10 lakhs debited to P&L account. Whereas with respect to partners related, sir, there is a section called 40B, which says like how much interest and remuneration paid to partners is allowed as deduction. So as per that section, how much is allowed? 7 lakhs only. But how much is debited to P&L? 10 lakhs. That means even though 10 lakhs is charged to P&L, income tax provision says like only 7 lakhs can be claimed as expense. So since you already debited 10 lakhs, what you will do, that 3 lakhs you will be adding back to the profit. Only 7 lakhs is allowed as deduction as per Income Tax Act. So disallowed amount 3 lakhs, what you will do, add back to income while computing the taxable profits. Understand, sir? Sir, now understand this example. How much is the actual expense? 10 lakhs. How much is allowed as per income tax? 7 lakhs. I mean 7 lakhs related expense you claim. Other 3 lakhs you didn't claim. Since 3 lakhs expense is disallowed, the 3 lakhs part is taxed in the firm capacity only. Understand this point, sir, very clearly. I have paid 10 lakhs. That fellow received 10 lakhs. But in my books, I can't claim 10 lakhs as expense. I can claim only 7 lakhs as expense. That means my profit jumped by 3 lakhs, right? Since I claimed only 7 lakhs as expense. So additional 3 lakhs, that 3 lakhs is taxed in my hands. Now in partner hands, again if you tax the 10 lakhs, there 10 lakhs is being taxed. Here 3 lakhs is being taxed. For a 10 lakh payment, 13 lakhs is being taxed. Sir, my expense, some other person's income. For me, actual expense is 10 lakhs only. Then to the partner also, it should be 10 lakhs income. This is the normal rule. But as per income tax provisions, they are saying like I can't take 10 lakhs as expense, only 7 lakhs. That means 3 lakhs, since it is not allowed as an expense, 3 lakhs is included in my profit and 3 lakhs got taxed here. Now if you tax again to that person 10 lakhs, in his capacity 10 lakhs is being taxed, my capacity 3 lakhs is being taxed. So overall 13 lakhs is being taxed, but the actual income is 10 lakhs only. That's why to counter that what they are saying means, since 3 lakhs is disallowed to me, the 3 lakhs part will not be taxed to him. Only 7 lakhs will be taxed to the partner. Okay. Whatever is the expense allowed to firm, such expense allowed to the firm is taxable to partner with respect to interest remuneration. Okay. For firm 5 lakhs allowed, partner 5 lakhs taxable. For firm 5 lakhs disallowed. This disallowed part, now it is being taxed in the firm capacity only. So that's why it is not again taxed to the partner. See the examples, sir, once again, you'll understand. Interest, bonus, commission allowed to the firm. So one is it is allowed to the firm, taxable only to the extent allowed as deduction to the firm, to the partner. Salary. To the firm it is allowed. Then to the partner also taxable only to the extent it is allowed as deduction to the firm. That means if it is disallowed, then it is not taxable to the partner. Then any compensation or any other payment received in relation with business or profession. So that means, sir, your supplier supplied a wrong quality or a cheap quality material which is not as per your quality standards. Because of that low quality material, your machines got damaged. So you showed your supplier. He paid 10 lakhs as compensation. That compensation is received because of business only. So that compensation is taxable under that PGBP only. Any compensation or any other payments received in relation to business or profession. Then export incentives. If you remember GST, sir, foreign trade policy related, there will be this DFIA credits, EPCG credits. So there will be duty drawback or any other rewards has been given to promote exporters. All this you are doing export, but nothing but it is a business. So any export incentives are received for doing business, all those are taxable under that PGBP only. Then when a trade, professional or similar association provides specified services to its members and the amount received is, sir, I am paying membership fees to CA Institute as well as CMA Institute. Okay. So now the membership fee received by them is taxable under which head? That's the question. Okay, the membership fee received by the CA Institutes or the CMA Institutes. These trade, professional or similar association provide specified service to its members. Okay, they provide certain services to me, for that I am paying membership fee or COP fee to them. So there is no principle of mutuality. What is principle of mutuality? Treating firm and partners as one and the same, or AOP and members as one and the same, is called as principle of mutuality. Here we are saying like what? Principle of mutuality does not apply. Firm is different, partners are different. AOP is different, members are different. So where any member pays a fees to AOP, that fees is considered as income under that PGBP only, and it is taxable. So the amount received is taxable under that PGBP, profit and gains from business or profession. So what are the 4 points we said? First one, any profit and gains arising from business or profession. Second one, where partner receives any amount from the firm. It could be bonus, interest, remuneration, commission. All those are taxable under that PGBP. Any compensation you received because of business, that is also taxable under that PGBP. Fourth one, any export incentive you received. Why you got export incentive? Because you did business. That is also taxable under that PGBP. Where any trade, professional or similar association received any membership fee or contributions from their members for providing specified services, all those are also taxable under that PGBP. Then value of any benefit or perquisite arising from business or profession. Even though we are not doing this, sir, you went for an outstation audit. Obviously, your train tickets, food, everything has to be borne by whom? Your auditor, your principal, by the client only, right? Client only. So now client not only paying audit fees to your principal, he is providing extra perquisites also. What are the perquisites? Food, those travel tickets, all this provided also has to be included in the salary. I mean, has to be included in the business receipts or professional receipts. Did you check your firm accounts? They will not account it. They will not even consider it. So that's the struggle of the client only, but the CS will not consider it. Let's say, there's a company which has like 5-6 branches. So now the auditor and the audit team has to visit all those 5-6 branches. But travel expenditure in itself, for the audit team itself, there might be some 2 lakhs. And then for the food and all, there may be another 1 lakh. So total expense is like 3 lakhs, which is over and above audit fee 10 lakhs. So total is how much? 13 lakhs. So that means this auditor has to recognize his revenue as how much? 13 lakhs. Why he'll recognize as 13 lakhs? Because already 3 lakhs is spent. Okay, if he recognizes 13 lakhs, on the 3 lakhs also he has to pay tax. So he'll not recognize 13 lakhs, he'll pay 10 lakhs, he'll recognize as 10 lakhs only. He'll say like nothing I received. But that person paid, that is his job. It's okay, he'll be adjusting somewhere in his miscellaneous expenses and all only. So because since this is audit related only, you will not raise again any objection. Sir, if you talk rules and all, so okay sir, then we'll not provide you food allowance and all, they'll say. Since we want that, we'll not raise. Value of any benefit perquisite arising from business or profession, whether in monetary form or in kind. Example, commonly provides tax consultancy service to ABC Private Limited. They pay 3 lakhs and provide flight tickets for her and team and food and accommodation, which costs 50,000. So the value of benefits in kind worth is like 50,000 is taxable under that PGBP only. Okay, but she'll not tell that one. That's the problem. So not only that one, sir, she needs to pay even GST on that also. Okay, so why she'll do all that one? So okay, if she include that additional 50,000, already spent 50,000, 18%, now GST she has to pay. Okay, why? Because this 50,000 will be considered as including GST. So into 100 by 118 you should do. So that percentage, and on that again 30% tax will go. So why he'll do all that? Simply he'll say like I didn't receive anything. Then some received for not doing it. So then how the how client will manage? He'll put it under staff welfare expense. Even though you are not staff, but he'll put it under the some staff welfare expense related he'll put. Okay, you are only the audit team, you will not raise objection. Who will raise? When an income tax officer comes in the process of assessment, and if we could find out that that is not an actual staff related expense, it is an audit team related expense, then it can be disallowed by the assessing officer. But that and all is practically not possible. Some received for not doing an act, restraining from doing something, or not sharing any patent know-how, etc. So this is for not doing an act. What is not doing an act? Sir, there's a competitor to control. It's not a competitor also. Let's say there's a raw material supplier to me. If he supplies the same raw material to my competitor also, there's no differentiation between my product and the competitor's product. So that's why I said to my supplier, you should supply only to me. For supplying only to me, let's say the raw material cost is like 50 lakhs. I'll pay that 50 lakhs. Additionally, I'll pay you another 25 lakhs for not supplying to any other person. Now that extra 25 lakhs is nothing but what? Restraining to do an act, or for not doing an act, I'm paying 25 lakhs. That 25 lakhs is also taxable under that PGBP only. Where some received for transfer of rights like patent or copyright, that is taxable. Sorry, if it is like for transfer of rights like patent and copyrights, they are taxable under what? Capital gains. Here no patent is being transferred. He's just restraining himself not to sell to any other person. Or else like there will be some kind of geographical limitations. There's a split in partnership firm, sir, let's say. Okay, now one partner has been went away from this particular partnership firm. So now to the parent one, to the first firm or to the first partners, he said like he'll start a new business, but he'll do a business within a particular territory. Okay, if he goes beyond that territory, he needs to pay extra fees to the partnership firm and all. So that is for what? Tolerating an act, for restraining to do an act. All these are all related to business only, taxable under that PGBP. And the eighth one, sir, Keyman insurance policy proceeds. Who is called Keyman? We know Spider-Man, we know Superman. So Keyman, he'll not be wearing a key, but still he's key to the organization. He's an employee to the organization only. He's a key person. Okay, without him, the organization may suffer a lot of losses. So that's why they are called as Keyman insurance. Now business know this. Sir, once we tell you are the important person for the business, then he'll start demanding us. Okay, so till now he might be taking 10 lakhs only. But once he realized he is a key man, then he'll ask 30 lakhs. He'll ask 40 lakhs. Now business, to a point it will pay. So afterwards business also can't pay, but business knows that this person will leave any point of time. Then the business has to suffer the losses. So there is a risk involved. So to cover that risk, they'll take Keyman insurance policy. So wherever there is risk, there will be insurance. Here the risk is this key person leaving organization is the risk. To cover that risk, they'll take Keyman insurance policy. Okay. So for 10 years, the company predicted like 10 years, he's a key person there. If he leaves, there will be losses. So they take a Keyman insurance policy for 10 years and they are paying premium. Now, this employee didn't left the organization. He's loyal to the company. He's there for the 10 years only. Now, company got the Keyman insurance policy proceeds. That some policy got matured. Sir, the policy may work like how? Sir, just like as a life insurance policy, the policy holder may expire, or on expiry of the period of time also they'll get the sum insured. Same here also, even though a key person didn't left the organization, since the term got expired, the company might be getting the policy proceeds. Now the policy proceeds, usually it will be received by the employer, the business person. Since he received, it is taxable under that PGBP. Sometimes, since the employee is loyal to him, he didn't left the company, the proceeds may be given back to the employee only. So to recognize his loyalty. Okay. So when it is given to employee, it is taxable to employee under that salaries. Okay. Employee expired. Okay. He didn't wantedly left the organization. Okay. He got some accident and he expired. So he left the organization. Now company got the Keyman insurance policy proceeds. Now company also has loss, but his family loss is much more bigger. That's why company or the employer may transfer this Keyman insurance policy proceeds to the family of employee. Then to the family of employee, it is taxable under that IFOS. Okay. So Keyman insurance policy proceeds, premium paid. Whatever is the premium paid, it's a business related expense only, because once he leaves, business might suffer loss. That's why to cover the risk, business is paying insurance. That is allowed as deduction only. The maturity amount, if it is taken by employer, taxable under that PGBP. If it is given to employee, taxable to employee under that salaries. If it is given to family of employee, then it is taxable under that other sources. Then fair market value of inventory on its conversion of capital asset, on its conversion to capital asset. So this is there is a construction company. They constructed this particular venture. So they wanted to sell all these particular flats, but their Jyotish, okay, in Telugu Jyotishudu they'll say astrologer. Okay, so the astrologer said like this particular corner plot is good for their business. So they say I mean, the astrologer said like to start there or to keep their office there only. So for a contractor or for a person who is involved in construction business, all these flats are like stock in trade only, his inventory. But now this one particular place or one particular flat he's converting into his office. Once he converted into office, it's like a inventory converted into capital asset. Okay, so it is not actually sold, but still we'll consider it as a sale and recognize it as the sale proceeds. Okay, so why we need to recognize it as a sale if it is not actually sold? Because this construction cost you already claimed as an expense, na? That's why even though it is not sold actually, you should recognize it as an income. Fair market value of inventory on its conversion to capital asset. So since it is not actually sold, what you should take as the sale value? The fair market value, the market rate 70 lakhs. Take 70 lakhs as the sale proceeds on the date of conversion. A builder holds flats as stock in trade. One flat is converted to an office, that is converted into capital asset. Though the flat is not sold, fair market value on the date of conversion is taken as sale value, and the fair market value is taxable under that PGBP. It's not straight away taxable under that PGBP, we will take it as a sale value. Then sum received or receivable in cash or kind on account of any capital asset where whole expenditure is allowed as deduction under 35 AD. So first 35 AD. 35 AD says what? It's about specified businesses. For specified businesses, 100% of their capital expenditure can be allowed as deduction. Sir, I said like I purchased an asset and I made a God promise to the income tax department like I'll use that asset only for the specified business. I used it for 2 years, then transferred it for a different purpose. Okay, so but what government believed? They believe like I'll be using that specified asset for a substantial period of time, some 5 years or 8 years like that I'll use. But I break the promise and I transferred it for different purpose. Now what they are doing, they are also breaking the promise and saying like whatever the deduction they given, they'll take back. Okay, but understand sir, there's a problem here. When they given 35 AD deduction 100%, let's say the asset cost is 50 lakhs. They given 50 lakhs as deduction to me. So the asset written down value became 0 now. Why? Because 50 lakhs I charge it to P&L. Sir, usually what you will do, you will claim depreciation every year. So you will have some written down value. Since here 100% capital expenditure is allowed as deduction in the first year itself, I charge a total 50 lakhs to the P&L. So my written down value is just now 0 it is. Okay. Since it is 0, I am not claiming any depreciation. I claimed only 35 AD. I didn't claim depreciation. Now when they are taking back 35 AD, they should have given what? Depreciation. Because of claiming 35 AD, I lost depreciation. Why I lost depreciation? Because the value became 0. So nothing I could charge as depreciation. When they are now taking back 35 AD, they should have given back me what? Depreciation. So now see this with an example, sir. Example, 35 AD business, 24-25. Capital expenditure on warehouse, I spent 500 lakhs. Deduction under section 35 AD, 500 lakhs. So the written down value became how much, sir? 0. Now in previous year 25-26, I sold the warehouse. I'm not using it for the specified business. Now what they are saying like, sir, whatever the sale proceeds are there, previously given as an expense, now they are saying like treat it as an income. How much I got? 500 lakhs. But the problem is, I'll not take the total 500 lakhs as an income. What I'll do? Depreciation that would have been allowed if there is no 35 AD. Sir, first year my asset cost is how much? 500 lakhs. Warehouse means it's a building. If there is no 35 AD, then I might have charged depreciation. How much? 500 lakhs into 10%, which would be 50 lakhs. Because of claiming 35 AD deduction, I didn't charge 50 lakhs depreciation. Now, once I sold, the total 500 lakhs will not be treated as income. 500 minus the depreciation that might have been given should be subtracted. So then only 450 lakhs will be treated as my income. So simple thing, sir. They said like when you use it for specified business, 100% deduction given. Once I fails to satisfy the conditions, deduction given will be again treated as income, but by giving the depreciation which I missed. Okay. So all these are the incomes which are chargeable to tax under that PGBP. So how many are there, sir? 10 points. So quickly, sir, 1 minute only. We can go. Profits and gains from business or profession carried on by the SSC during the previous year. First one. Okay. If any passive incomes like dividend, interest, winnings are there, those are taxable under the IFOS side only. Rent is taxable under the house property. If their main business itself is earning interest, business itself is like earning rental income, then they are taxable under the head PGBP only. Then where any interest, salary, commission, remuneration paid to partner by a partnership firm, taxable under that PGBP. Any compensation or other payments received because of business, taxable under that PGBP. Then export incentives, taxable under that PGBP. Where a trade, professional or similar association provided services, for that it received payments from members. There is no principle of mutuality, taxable under that PGBP. Then value of any benefit or perquisite arising because of business. Okay, any perquisite, any benefit I got because of business, that value is also taxable under that PGBP only. Some received for not doing an act, restraining to do an act, not sharing any patent know, that is also taxable under that PGBP. Whereas if the total patent itself is being transferred, intangible asset being transferred, capital asset, taxable under capital gains. Keyman insurance policy proceeds, retained by employer, taxable under that PGBP. Given to employee, taxable under that salary. Given to family members of employee, taxable under IFOS. Fair market value of inventory and conversion of capital asset into, on conversion of inventory into capital asset. So the fair market value as on the date of conversion will be treated as sale proceeds. Then sum received on violation of 35 AD. So whatever is the sum received in cash kind on account of capital asset where expenditure is allowed as deduction under 35 AD. So 35 AD deduction has been claimed on an asset and that asset is now transferred. What are the amount you received, that will be claimed as what? Treated as income after charging depreciation that was missed because of 35 AD. Okay. So okay sir, balance will continue tomorrow. So tomorrow sir mostly will be solving problems only. Thank you all. So tomorrow onwards the class will be in the BCCA app only for the live students, and then tomorrow the class also starts at 11 AM. It's okay.